The greater our knowledge increases, the more our ignorance unfolds. John F. Kennedy. A very good morning to all present here. I, Dr. Shilpa NC, warmly welcome you all for this one-day faculty development program on financial statement analysis organized by Department of Studies and Research in Commerce of Karnataka State Open University, KSOU. Before entering into any important event, we need to seek the blessings of God to ensure auspiciousness and well being. Now, I would call upon Srimati Indira for invocation prayer.
ಬಾಬೆನಕ ಪೂಜಿಸುವೆ ಬಾಗಿನಕ್ಕೆ ಕಡುಬೀವೆ ಬಾಬೆನಕ ಪೂಜಿಸುವೆ ಬಾಗಿನಕ್ಕೆ ಕಡುಬೀವೆ ಹೆಡರುಗಳ ತೊಡರುಗಳ ಬಿಡಿಸಿ ಕಾಪಾಡಯ್ಯ ಹೆಡರುಗಳ ತೊಡರುಗಳ ಬಿಡಿಸಿ ಕಾಪಾಡಯ್ಯ ಬಾಬೆನಕ ಪೂಜಿಸುವೆ ಋಷಭವಿದೆ ಸಿಂಹವಿದೆ ಇಲಿಯನೇರಿದೆ ಹೇಗೆ ಋಷಭವಿದೆ ಸಿಂಹವಿದೆ ಇಲಿಯನೇರಿದೆ ಹೇಗೆ ಮನ್ಮನೋರಥವೇರಿ ಸಂಚರಿಸೋ ಗಣಪಯ್ಯ ಮನ್ಮನೋರಥವೇರಿ ಸಂಚರಿಸೋ ಗಣಪಯ್ಯ ಬಾಬೆನಕ ಪೂಜಿಸುವೆ ಬಾಗಿನಕ್ಕೆ ಕಡುಬೀವೆ ಏಕದಂತನೆ ನಿನಗೆ ಏಕವಿಂಶತಿ ದೂರ್ವೆ ಏಕದಂತನೆ ನಿನಗೆ ಏಕವಿಂಶತಿ ದೂರ್ವೆ ರಕ್ತ ಚಂದನ ಬೆರೆಸಿ ಭಕ್ತಿಯೊಳಗರ್ಪಿಸುವೆ ರಕ್ತ ಚಂದನ ಬೆರೆಸಿ ಭಕ್ತಿಯೊಳಗರ್ಪಿಸುವೆ ಬಾಬೆನಕ ಪೂಜಿಸುವೆ ಬಾಗಿನಕ್ಕೆ ಕಡುಬೀವೆ ಶೋಕದಿಂ ಸ್ತುತಿಸುವರ ಕರುಣೆಯಿಂ ಬೇಡುವರ ಶೋಕದಿಂ
in the year 1996 with the vision of higher education to everyone, everywhere. Our university is recognized by University Grant Commission, and some of the courses are approved by AICTE and NCTE. I proudly say that our university is the only university offering distance education in the state of Karnataka. The university offers various undergraduate, postgraduate, uh, PhD programs besides undergraduate and postgraduate certificate and diploma programs in various disciplines like humanities, social science, commerce, and management. The university is fully occupied with more than 30 academic departments. The uniqueness of our university is the admission will be done in two cycles. One is in January cycle and the other one is in July cycle. In the last academic year, we have a total strength of 25,000 fresh enrollment for various programs of our university. I proudly say that our commerce department is the biggest department in our university, not only in the university, even in the state of Karnataka, with a total strength of 10,000. Presently, students are pursuing various programs like BCom, MCom, PG certificate programs, as well as for PhD programs. Our Karnataka State Open University is providing various facilities to the students through scholarship to the students of SC, ST, and OBC, fees concession to BPL women candidates, defense and ex-servicemen students, and to the university staff members, their spouse, and their children, and full fee concession to the transgender and to the completely blind students, and also full fee concession for various programs for the students who are admitting for the programs for the candidates whose parents are diminished in COVID-19. This faculty development program is organized with the main intention of professional development of commerce and management faculties and also the research scholars. This is the kind opportunity where all the commerce and management fraternity will join in one umbrella to enhance and exchange the knowledge. This faculty development program provides an exhaustive various financial models and equip all the participants in analyzing various case studies relating to the financial statement analysis. Now it is the time to welcome our dignitaries. Our beloved senior professor, founder, chairman, well known expert academician of commerce and management, Professor Jagdish sir, has graced the occasion as chief guest to our faculty development program. We got an opportunity to invite our professor as a chief guest. We are here today and standing in front of you all as a KSOU faculty in the KSOU campus. It is because of Jagdish sir, because he has created an opportunity by building the department. When we requested our Professor Jagdish sir to deliver a keynote address, he was heartfully accepted and here today with us. It is great honor and privilege to welcome our beloved professor, founder chairman, Professor Jagdish sir to the one-day faculty development program on financial statement analysis organized by the Department of Studies and Research in Commerce, Karnataka State Open University, Mysore. I request our registrar sir to welcome our chief guest. I request our registrar sir to welcome our chief guest. When we contacted our resource person, Dr. Rajesh Kumar sir, that we had planned for organizing one-day faculty development program and you have to take over the session as a resource person, without any second thought, sir has agreed to spare and spend his valuable time to extend his knowledge to all of us. Sir will take you to the new world of accounting and finance area, as many of us are already experienced the way how sir will going to enrich our knowledge and some are yet to experience. Sir is a man of simplicity with bundle of knowledge. it is my immense pleasure to welcome our beloved professor and my guru, Dr. Rajesh Kumar sir, on this great occasion of faculty development program on behalf of our university and the department. I request our registrar sir to welcome our resource person. When we thought of organizing one-day faculty development program, our Honorable Vice Chancellor Sir was happily accepted and encouraged us to organize this program and to fulfill all the formalities. Sir always says, I'm a teacher, I always give preference to the teachers. This program is in reality because of his encouragement. Our Honorable Vice Chancellor, sir, is always a dynamic and a good administrator. I wholeheartedly welcome our Honorable Vice Chancellor, Professor Sharnappa V. Halse, sir, in his absence. For organizing this faculty development program, we had very short time, but still our Honorable Registrar, sir, even in his busy schedule, he has cooperated in all respect. He has given all kind of support to us to fulfill all the formalities to organize this faculty development program. It is, and in absence of our Vice Chancellor, our Registrar sir is presided over here today with us. It is my opportunity to welcome our Honorable Registrar, Professor KLN Moti sir, on this occasion on behalf of Karnataka State Open University and Commerce Department. It gives me great pleasure to welcome our Dean Academic, Professor Ashok sir. He always support and cooperate for all academic matters. He was supported in all respect for organizing this development program. I welcome you, sir, on behalf of Karnataka State Open University and the Department of Commerce. I would like to welcome our Registrar Evaluation Professor Praveen sir. For all kind of examination matters, he always support for all the teachers and also for the Department of Commerce. So I welcome Registrar Evaluation Professor Praveen sir for this faculty development program on behalf of Karnataka State Open University and the Department of Commerce. I would like to welcome our finance officer. When we requested our finance officer, he said he will be here today with us for whole day as this financial statement analysis is also needed for them. And he intends to bring even our finance department staff members to this program. They are also here today. And it is my honor to welcome our finance officer to this program on behalf of Karnataka State Open University and department. I also welcome our Dean Study Center, Professor Ramnathan Naidu sir, in his absence to this program. You are all the center of attraction for this program. All the participants came here all the way from all the districts of Karnataka states, from various esteemed colleges, and all the professors and research scholars are here today. So I welcome all of you for this one-day faculty development program on behalf of Karnataka State Open University and the department. Our university teaching and non-teaching staffs of various departments are also here today with us. I wholeheartedly welcome all of you for this program. And some of the students are also accompanied along with the faculty members. So I welcome all of them. Our commerce and management faculties are actively participated in organizing this faculty development program. I heartily welcome all of them. Our non-teaching staffs worked a lot in backstage for the success of this program. I'm really grateful to them. It is my gratitude to welcome all of them to this one-day faculty development program. There are photographers, technical staffs, video studio team members are all supporting for this program. I welcome all of them on this great occasion. I also welcome the press reporter for this program. I welcome all those who are supported directly and indirectly for organizing this program. I hope all the participants will enjoy learning the knowledge enhancing program in all the sessions. Thank you for giving me this opportunity for welcoming and delivering the introductory note on this great occasion. Thank you, everyone.
Thank you, Srimati Ushasi, for your prolonged introductory speech. You have to find what sparks a light in you so that you, in your own way, can illuminate the world. Oprah Winfrey. May I now request all dignitaries on dais to inaugurate the one-day faculty development program by lighting the lamp. ಇಲ್ಲ ಇಲ್ಲ ಹಾಂ Thank you, dignitaries. Without much ado, I would now introduce our distinguished scholarly resource person for today's function, Dr. V. Rajesh Kumar, to the gathering. Dr. V. Rajesh Kumar is an MCOM graduate from Bangalore University. He has got his doctorate in the area of strategy, while accounting and taxation are his areas of expertise, is his area of passion. He has 8 years of teaching experience at graduate, postgraduate, and professional levels and have served various institutions in different capacities. Mount Carmel Institute of Management, Bangalore University, Department of Commerce, and Alliance Business Academy, to name a few. He is a faculty for strategic financial management at the Bangalore branch of the Institute of Chartered Accountant of India. He has authored books on financial management and indirect taxes for the requirement of professional courses and has co-authored textbooks on accounting, finance, and taxation for the requirement of various universities. He was the first Indian professor to be selected for International Management Teachers Academy (IMTA) training on case analysis and writing conducted by Central East European Management Development Association at IEDC, Bled School of Management, Bled, Slovenia in June 2006. He has presented papers at various national and international conferences and published articles in reputed journals. His paper on capital asset pricing model was selected by an international conference at Harvard University, Cambridge, USA during May June 2011. Dr. Rajesh also has a rich experience in research, consultancy, and training, both at the academic level and corporate level. He has conducted student development programs and faculty development programs in various educational institutions and has conducted training programs for executives of various companies like Wipro, Godrej, FCG, Honeywell, KPCL, Forest Engineers, Triveni Engineering, Tyco Electronics, etc. in the area of accounting, finance, and taxation. He is associated as resource person for the finance for non-finance executive programs of the Bangalore branch of the Institute of Chartered Accountants of India. He is the founder of Vittam Pravina Gurushala Finance Expert Academy, an academy engaged in spreading the knowledge of finance to students, faculty, corporate, and all other interested in the area of finance. Presently, he is serving as professor and dean in the School of Commerce and Management of Chanakya University. I would now request our Honorable Registrar of KSOU, Professor KLN Murthy, to honor our resource person, Dr. V. Rajesh Kumar. Thank you, sir. I would now request Dr. V. Rajesh Kumar, our resource person, to address the gathering.
ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. Very good morning, one and all. Respected and honorable dignitaries on the dais, the audience, participants, faculty. For me, being part of this event is a great privilege, pleasure, and honor. I'll be interacting with you throughout the day. Lot more about the program I'll be mentioning at that time. But when Professor Usha contacted me for having a faculty development program, one thing we were deliberating was what should be the theme for the program, which can be of common interest for everyone and can be a good takeaway, can be of practical exposure, and something which can add value to both faculty and students. And we zeroed down on this topic for various reasons. One, ask any undergraduate student who has passed BCom, one thing they feel they have good expertise is financial statement analysis. But the story is different when most of our students go for placements, and I sit in placements of various company placement panels. This is one area which we find very grossly neglected and the knowledge is inadequate. And two, what is taught in classroom is very minimal. Most of the time we just spend time on teaching some ratios, common size, uh, comparative statements, etc., which is very limited and which is very traditional. But the world has moved on and there's so much that has developed and wonderful that has been evolved, and we felt there is a need for that to be oriented, embedded into syllabus, being taught, so they can be more industry ready. So we zeroed on this topic. By now, most of you should be aware what is the content, what is the coverage. As I said, more about the program I'll mention later. But for me, what gives me a big privilege, pleasure and honor is, firstly, when I started my career in teaching, as was mentioned, I also had opportunity to work with university. I was appointed in Bangalore University, but 4 years later, I resigned the job and started my own. But when I started, one person who held my hand and gave me great opportunities was Professor Jagdish, the founder, dean, chairperson of Department of Commerce at KSOU. He gave me opportunities to be part of many contact programs, showed me the world of how exam system happens and whatnot. The kind of exposure he gave, invaluable. And today, if I have some knowledge about the university system, depth in some topics, it's one of the reasons is the opportunities that was given by Jagdish sir. And when I got to know sir will be gracing the occasion, I felt really a pleasure and privilege to be part of this. And this morning when I come here, I was in for a bigger and a pleasant surprise. Registrar of KSOU, Professor Murthy, we have been very good friends for more than 24 years. A wonderful, dynamic person. Both of us got appointed in the university at the same time, 98. And sir was part of Tumkur University. I was part of Bangalore University Kolar PG Center. Such a dynamic person, a great motivator, a darling of the students, whatnot. And I was not aware that actually Dr. Murthy is registrar here. I'd seen the name, but I didn't place that it was my good old friend actually. Sir, it was a great pleasure meeting you, and so happy that it's in your presence. And I'm very, very confident KSOU is in very safe and dynamic hands with Professor Murthy as a registrar. That is another reason for me for feeling very happy to be part of this program. And when I interacted with the other authorities, the Dean Academics, the finance officer, the registrar evaluation, one thing that was surprising was all these are academicians who are holding administrative positions. And imagine an university when academicians are at the center and are leading the show. And you can make out the difference. And we can see in past few months the difference, the direction that KSY has got, and the innovative pedagogy that they're coming up with, and everything that whatever we see, it's a big revolution that's happening. And credit goes to the team that we have here today. I thank firstly Ms. Usha for this opportunity, KSOU, all authorities, registrar, my very good friend, for giving this opportunity and making all this happen. And of course, I thank each one of you for making time and coming for this. I can assure you, by the end of the day, you will have a very good takeaway. And I'm sure if you can take this to classroom, we can see a very big difference out of it. Thank you so much. Thanks for the opportunity. Let's hope to have a very good day with us. Thank you.
Thank you, sir, for explaining the relevance of topic chosen for FDP program. Now, I would introduce our eminent and beloved chief guest for today's function, Professor Jagdisha, to the gathering. Professor Jagdisha is one of the renowned and expert academicians in the field of commerce and management. He is well known for his significant contributions in the field, not limiting himself to Karnataka but across the country. Professor Jagdisha has rendered his service for 37 years in Karnataka Open University and served the university at various capacities. To name a few, he worked as Registrar Evaluation, Dean Academics, In Charge Register, as well as In Charge VC. He has been chairperson for around 35 years. He has worked as peer team members, member coordinator, and chairman to peer team for NAC. Sir has disposed works of BOS, BOE, Board of Appointment, Expert Committee Member, Selection Committee Member at various universities across Karnataka. His contributions towards open and distance learning have created a benchmark for the universities. He has worked as a member of UGC team to extend financial assistance for two central universities. He was also a member of AICTE team to accord permission to over 5 institutions. Professor Jagdisha has more than 20 paper publications in esteemed journal and 5 books in his credit. He has undertaken 3 major research projects on ODL. He has organized numerous national and international conferences along with more than 120 workshops. 26 candidates have been awarded PhD and 10 candidates awarded MPhil under his guidance. He also was a part of organizing programs such as industry institution interface with various industries. Now, even he, after retirement from the post of professor DOSR in commerce, his zeal towards is still alive as he currently provides guidance to KSOU for preparing itself for NAC committee. A warm welcome you, sir. Now, I would request our beloved registrar of KSOU, Professor KLN Murthy, to honor our chief guest, Professor Jagadisha. I would now request Professor Jagdisha to deliver the keynote address for today's function.
ಎಲ್ಲರಿಗೆ ನಮಸ್ಕಾರ. Well, respected president of the function, Professor Murthy sir, all other statutory officers in the dais, the coordinator of the program, Dr. Usha, more importantly, the resource person. Those days he was a tiny, today is a mightier, none other than Professor Rajesh Kumar. A very interesting person he is. Probably you will be able to understand the capability of the person after some time. All the delegates who have been gathered over here, some of the non-teaching staff have also participated in this program, the media person, and all others, including the faculty members belonging to the Department of Commerce and Management of this university. Good morning from my side. I am delighted to be a part of this wonderful program, Faculty Development Program. Faculty Development Program is indeed very important for a university across the country. Definitely, it equips the teachers. The faculty members are the lifeblood of the university. If the faculty members are very good, I'm sure they will be able to communicate good skill and knowledge, attitude to the students at large. Thereby, the productivity will shoot up. But I'm really wonder, how come this FDP for just only one day? It could have been stretched for at least 3 days, even more. FDP, as stipulated by the regulatory body, is also speaking in such a way that if it is conducted in just one day, the required knowledge and the skill may not be transmitted to the targeted group of the audience. Yet, I think the experiment is being made. I think in the days to come, the university, otherwise the department, will be definitely focusing upon the more number of days, especially for 3 days to 5 days, as stipulated by the regulatory body. A university of this kind shall conduct the FDP, the conferences, the seminar at various levels, national, international level. Unless otherwise the teachers are completely equipped, I'm sure the quality cannot be assured. There's a say that, quality and prosperity. Without quality, I think no institution will survive. And the quality is just a journey which nobody can achieve in overnight. It will take a long time. Just a beginning. And in fact, when I was able to join this university sometime 1996, not 1996, 1986, it was a very tiny. Today, I think it's mightier. Karnataka State Open University is enjoying with monopoly. It is the exclusive university offering the open and distance learning program across the state. Absolutely, there are no differences between the students of KSYU and the students of the conventional university. So that is how the platform has been created by the University Grants Commission. I said the FDP is very important, especially for education institution like this. And today you find a lot of changes in the education system of the country. A big challenge before all of us is the NEP, National Education Policy 2020. Conventional universities have already implemented, particularly in the state of Karnataka, they have already implemented. But why not open university is a question. Why open university should also get up its machinery to introduce NEP. The reason being, the student of this university should be considered equivalent to or at par with other universities. Therefore, this is the time for KSYU about the introduction of NEP. If you are able to introduce NEP, I'm sure the curriculum will be very vibrant. And a lot of the input can be definitely served to the students. Thereby, they can be definitely stimulated to a greater extent. Needless to say, there are about 1,070 universities in the country. This is as per the statistics, November 2022, 1,070 universities are there, comprising of the central funded university, the state funded university, the private university, the deemed to be university, and more than anything else, what you call the institution of national importance. All put together, 1,070 universities are there. Karnataka state is the pioneer state to introduce NEP. All other conventional universities have already injected NEP into their curriculum at the level of undergraduation. And I was trying to read some article, Mr. B.C. Nagesh, the Honorable Minister for the Primary and Secondary Education, he admitted very clearly that NEP will be started from Anganwadi from this year. At least 200 Anganawadis will be brought under this purview. And he says very clearly, NEP also clearly envisaged this by 2030, 100% achievement can be definitely made under primary and secondary education. The GER I'm speaking about. When it comes to GER of higher education, as on today, it's only about 29%. But NEP was able to speak in such a way, by 2020, the government of India, otherwise the whole country should be able to achieve, say, 30% of the GER. By 2022, it should be something like 35%. And by 2035, we should be able to cover at least 50% of the GER. That's what I think NEP speaks about. And as on today, if you take inventory into, if you take stock into account, I'm sure it is just hovering around 28 to 29%. Government is focusing more on what you call the quantity. I think quality should also be taken care. Quality can be definitely emphasized by concentrating on various aspects. And today, everywhere, competition, and the competition. A university like KSYU needs to compete with the conventional university. It has to compete with other open universities in the country. There may be some embargo with regard to the geographical boundary, operation of the geographical boundary, but still we should rise. We, in the sense, the university, Karnataka State Open University, should be able to rise to the expectations such that all issues should be able to compete with its own counterpart located in different parts of Karnataka. I think this is the time for the university, that took KSYU, to please think of introducing the NEP. And let me just bring it to your notice, especially to the Honorable Registrar, Professor Murthy sir. Kindly take note of it. The IGNO has already made an attempt to introduce NEP for certain program. Then a university located in Ahmedabad, I think a few days ago, the Vice Chancellor from Ahmedabad, that is Baba Sahib Ambedkar Open University, Ahmedabad, she was here for some work, maybe AAA related work. Madam has also mooted an effort on the same lines. If this effort is mooted by the Karnataka State Open University, I'm sure you will be able to overcome so many problems. The enrollment will also shoot up. And also we make a request to you to please try for NIRF. Nowadays, what happened? Any student who go for enrollment, you will always see what is the ranking of this university, XYZ. Gone are those days where people used to be contented. Now it is impossible. Survival of the fittest. If we are able to equip ourselves, we can survive. If not, it's a big problem. And with this, coming to a very important aspect, that is FIP. That is not FIP, but then FDP. Well, Professor Rajesh Kumar is a very mightier as on today. You'll be able to touch upon various aspects relating to financial statement analysis. Financial statement analysis, probably everybody knows. It is one of the topics at the level of UG, BCom, BBA, MCom, MBA also, management accounting, financial accounting, or whatever you can speak about. The curriculum that has been developed by the university was completely peripheral. It is at the micro level. And people will be able to see something we can understand quickly. There are 3-4 important methods, and one of the important questions will be definitely appeared in the question paper. And if you are able to concentrate on it, I'm sure we'll be able to take away at least 13, 14 out of 15. No, gone are those days. Today, under NEP, a financial statement analysis could be one of the important paper. I think that has to be pondered over. At every micro level, people are required to understand the implications. There are hardly any research work conducted, especially in accounting, particularly the financial statement analysis. If you're able to if you're able to listen to the lectures delivered by Professor Rajesh Kumar the whole day, I'm sure you will have complete knowledge, skill relating to financial statement analysis. That will definitely motivate you to take up some projects, maybe minor research project, major research project. If not, you can deliver wonderful goods to the students. If students are properly harnessed with the proper knowledge and the skill, That itself is a productivity. That itself is what you call the outcome. You can call it as a course outcome, otherwise program outcome. If program outcomes are really vibrant, I'm sure that will help you to face interview with all confidence. And he has pointed out just a while ago that some students will come and appear for the interview. Expert says, what are these financial statement analysis? He says, it is only analysis of financial statement, nothing more than that. And the students will also come out with various techniques. What are those techniques? They are all, I think, the implied related things. I think people will be able to quickly come out with that. And they concentrate more on ratios, the current ratio, the quick ratio. And so many other ratios are there. I think I need not have to tell you. It is not the end of it. It is only peripheral. But if you use the microscope, you will be able to understand so many other issues are there, which I think as a teacher, I have also not understood what it is. We are very curious to understand each and every aspect of the financial statement analysis. Take up our own university. How are they analyzing the financial statement? When you look at the financial statement, people can say that the profit and loss account, balance sheet, and cash flow statement. What are the objectives? Objectives of financial statement analysis, statement, very clear. Stakeholders, they must be happy with the. If not, it's a problem. When you talk about the stakeholders, probably the internal and the external. What are the expectations of the external and what are the expectations of the internal? It's very, very important. If you take up this Infosys, they always focus on the financial statement analysis. Similarly, all other organizations, maybe Reliance. Then Indian Oil Corporation, I was able to look into the website. They also focus on the financial statement analysis. If the financial statements are not properly analyzed, I tell you, you cannot expect good response from the general public. Point number one. Point number two, you will not be able to get even the loan also from the banks. Nowadays, the NPA is mounting. Rather, NPA as on today is touching as high as 12 lakhs crores. It's a big amount. And why it is happening? Probably they are not examining the financial statement analysis properly. They are not involved. And then the analysis was not done with all concern. Rather, subjectivity was very much prevailed rather instead of the objectivity. So what I would say that, the financial statement analysis looks to be very smaller, but then if you are able to understand each and every aspect, you will certainly, yes, you will be definitely equipped. And that should not be the end of it. Afterwards, please go back to your department, share your knowledge with all your peers. This information, the knowledge and the skill to the students as well. Because students are the real brand ambassadors for any university, including the Karnataka State Open University. End of the day, they should be feeling very happy with the content delivered by the teachers. So therefore, this particular program is of great relevance. I'm sure this program will be really fruitful. You will enjoy every aspect, not only at the micro level, even at the macro level. You will come out with the good feedback also to the department headed by Dr. Usha, and that will help everyone to ameliorate the very system, maybe the faculty development program. With this, I would say, we wish this program a great success. And I thank the university authorities for giving me this opportunity. And I also thank the departmental people, more particularly the chairperson, for giving me this important, the space on the dais for me. Thank you, all of you. Thank you very much.
Thank you, sir, for the thought-provoking and cognizant keynote address by enlightening us with the program outcomes and course outcomes. Now, I request Dean Academics, Professor Kamble Ashok, to address the gathering.
Good morning, everybody. So, today's functions, chairperson of the function, Professor K.L. Murthy sir, ex-dean of the KSOU, Professor Jagdish sir, and who has come here to deliver special lecture, Dr. Rajesh sir, our university's registrar evaluation, Professor Praveen ji, finance officer, Dr. Khadar Pasha ji, and coordinator of this function, Usha ji, and all here gathered. ಇಲ್ಲಿ ಜಮಾ ಆಗಿದೆ ಎಲ್ಲ ವಿದ್ವಾಂಸರು. ಸೊ ತಮ್ಮೆಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ ಮಾಡ್ತೀನಿ. ಆ್ಯಕ್ಚುಲಿ ಟುಡೇ that our Usha, she has conducted this FDP, which is essentially required for teaching staff as well as students also. ಸೊ ಯಾಕೆ ಅಗತ್ಯ ಇದೆ ಅಂದ್ರೆ ಜಸ್ಟ್ FDP, ಫ್ಯಾಕಲ್ಟಿ ಡೆವಲಪ್ಮೆಂಟ್ ಪ್ರೋಗ್ರಾಮ್, ಅದು ಯಾಕೆ ಬೇಕಂದ್ರೆ ಅತ್ಯಂತ ಅವಶ್ಯಕ ಇದೆ. ಇದು ಯಾಕೆ ಅವಶ್ಯಕ ಇದೆ ಅಂದ್ರೆ ಜಸ್ಟ್ ನಾವು ಮಾಸ್ಟರ್ ಡಿಗ್ರಿ ಮಾಡ್ತೀವಿ, ಮಾಸ್ಟರ್ ಡಿಗ್ರಿ ಮಾಡಿ ಲೆಕ್ಚರ್ ಆಗ್ತೇವೆ, ಲೆಕ್ಚರ್ ಆದ್ಮೇಲೆ ಜಸ್ಟ್ ಇದು ಪಾಠ ಮಾಡ್ಲಾಕ್ ಹೋಗ್ತೇವೆ, ಪಾಠ ಮಾಡ್ಲಾಕ್ ಹೋದ್ಮೇಲೆ ಕೆಲವು ನಾಲೆಜ್ ಇರೋದಿಲ್ಲ. ಬಿಕಾಸ್ ನೋ ಬಡಿ ಈಸ್ ಪರ್ಫೆಕ್ಟ್ ಇನ್ ದಿಸ್ ವರ್ಲ್ಡ್. ಸೊ ನೋ ಬಡಿ ಹ್ಯಾಸ್ ಕಂಪ್ಲೀಟ್ ನಾಲೆಜ್ ಆಫ್ ಎನಿ ಒನ್ ಫೀಲ್ಡ್. ಈಗ ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ ಮೈನ್ ಈಸ್ ಹಿಂದಿ. I completed my MA in Hindi. I got first rank in MA as well as MPhil first rank. So ಈ ಥರ ಅಂತರ ಜಸ್ಟ್ ಈಗ ನಾನು ಹಿಂದಿ MA ಪಾಸ್ ಆಗಿದ್ದೀನಿ ಅಥವಾ ಫಸ್ಟ್ ರ್ಯಾಂಕ್ ಒಳಗೆ ಪಾಸ್ ಆಗಿದ್ದೀನಿ ಅಂದ್ರೆ ನನಗೆ ಜಸ್ಟ್ ಏನು MA ಒಳಗೆ ಅಷ್ಟು ಸಬ್ಜೆಕ್ಟ್ ಇರ್ತಲ್ಲ, ಅಷ್ಟು ಸಬ್ಜೆಕ್ಟ್ ಒಳಗೆ ನಾಲೆಜ್ ಇರಲ್ಲ. ಯು ಮೇ ಗೆಟ್ ಮೆನಿ ಪರ್ಸನ್ಸ್, ದೋಸ್ ಹೂ ಆರ್ ಲೆಕ್ಚರ್ ಆರ್ ಪ್ರೊಫೆಸರ್ಸ್ ವರ್ಕಿಂಗ್ ಇನ್ ದ ಯೂನಿವರ್ಸಿಟಿ ಆಸ್ ಎ ಹಿಂದಿ ಪ್ರೊಫೆಸರ್. ಸೊ they will not speak correctly or grammatically. You may find many mistakes in their language, even though they have completed MA in Hindi, but due to grammar knowledge illde karan, due to grammar knowledge illde karan grammatical mistakes ಸಾಕಷ್ಟು ಮಾಡ್ತಾರ. ಸೊ ಆ ದೃಷ್ಟಿಯಿಂದ ಬೇರೆ ಸಬ್ಜೆಕ್ಟ್ ಒಳಗೆ ಇದು ಇರ್ಬೋದು, ಇಂಟೆಲಿಜೆಂಟ್ ಇರ್ಬೋದು, ಬಟ್ ಗ್ರಾಮರ್ ಒಳಗೆ ಭಾಳ ತಪ್ಪು ಮಾತಾಡ್ತಾರೆ. ಅಂದ್ರೆ ಹೇಳೋ ತಾತ್ಪರ್ಯ ನಂದು ಇಷ್ಟೇ ಇದೆ, ಯಾರು ಪರ್ಫೆಕ್ಟ್ ಇರೋದಿಲ್ಲ, ಯಾವುದೋ ಒಂದು ಸಬ್ಜೆಕ್ಟ್ ಒಳಗೆ ಪರ್ಫೆಕ್ಟ್ ಇರ್ತಾರೆ. ಸೊ ಆ ದೃಷ್ಟಿಯಿಂದ ನೀವು ಈ ಥರ FDP ಮಾಡಿದಿರ ಅಂದ್ರೆ ಜಸ್ಟ್ ಈ ಯಾವ ಸಬ್ಜೆಕ್ಟ್ ಒಳಗೆ ಯಾರು ಎಕ್ಸ್ಪರ್ಟ್ ಇದಾರಲ್ಲ ಅಂಥವ್ರಿಗೆ ಕರೆಸಿ, ಸಪೋಸ್ ಈ ಥರ ಇದು ಮಾಡಿದೆವು ಅಂದ್ರೆ FDP ಪ್ರೋಗ್ರಾಮ್ಸ್ ಈ ಥರ ಕಂಡಕ್ಟ್ ಮಾಡಿದೆವು ಅಂದ್ರೆ ಅವ್ರ ನಾಲೆಜ್ ಎನ್ಹಾನ್ಸ್ ಆಗುತ್ತೆ. ಅವ್ರ ಮಕ್ಕಳಿಗೆ ಅಂದ್ರೆ ಸ್ಟೂಡೆಂಟ್ಸ್ಗಳಿಗೆ ತುಂಬ ಚೆನ್ನಾಗಿ ಪಾಠ ಮಾಡ್ಬೋದು, ಒಳ್ಳೆ ಸೊಸೈಟಿ ನಿರ್ಮಾಣ ಮಾಡ್ಬೋದು. ಸೊ ಈ ದೃಷ್ಟಿಯಿಂದ FDP ತುಂಬ ಅಗತ್ಯ ಇದೆ. ಆ ದೃಷ್ಟಿಯಿಂದ ಈ ಏನು ಕೊರತೆ ಇದೆ, ಕೊರತೆ ಗಮನದಲ್ಲಿ ಇಟ್ಕೊಂಡೆ UGC ಏನು ಮಾಡುತ್ತೆ ಅಂದ್ರೆ ಎಲ್ಲ ಡಿಗ್ರಿ ಕಾಲೇಜ್ ಲೆಕ್ಚರ್ಗಳಿಗೆ ಓರಿಯೆಂಟೇಷನ್ ಪ್ರೋಗ್ರಾಮ್ ಅಂತ ರೆಫ್ರಿಜರ್ ಕೋರ್ಸ್ ಅದರಲ್ಲಿ ಭಾಗವಹಿಸ್ಲಾಕೆ ಇದು ಮಾಡುತ್ತೆ. ನಿಮಗೆ ಪ್ರಮೋಷನ್ ಕೊಡ್ಬೇಕಂದ್ರೂ ಜಸ್ಟ್ ಆಕ್ಚುಲಿ ಅದು ಜಸ್ಟ್ ಓರಿಯೆಂಟೇಷನ್ ಪ್ರೋಗ್ರಾಮ್ ಮತ್ತು ಅಂತ ರೆಫ್ರಿಜರ್ ಕೋರ್ಸ್ ಆಗಿದೆ ಅಥವಾ ಇಲ್ಲ, ಅದು ಆದ್ರೆ ಮಾತ್ರ ನಿಮಗೆ ಪ್ರಮೋಷನ್ ಕೊಡುತ್ತೆ CS ನಲ್ಲಿ. ಅದು ಇದ್ರಂದ್ರೆ ಕೊಡೋದಿಲ್ಲ ಈ ಥರ. ಸೊ FDP ಇವ್ರು ಏನು ಕಂಡಕ್ಟ್ ಮಾಡಿದಾರೆ ತುಂಬ ಚೆನ್ನಾಗಿದೆ, ಪ್ರಶಂಸನೀಯ ಇದೆ. ಬಟ್ ಆಕ್ಚುಲಿ ಏನಂದ್ರೆ ಜಸ್ಟ್ ಅವ್ರು ಬರೀ ಒಂದು ದಿವಸ ಮಾಡಿದಾರ, ಒಂದು ದಿವಸದಿಂದ ಸಾಕಾಗೋದಿಲ್ಲ. ನಮ್ಮ ಜಸ್ಟ್ ಪ್ರೊಫೆಸರ್ ಜಗದೀಶ್ ಸರ್ನು ಹೇಳಿದ್ರು, ಒಂದು 3 days or 5 days ಇಟ್ ಶುಡ್ ಬಿ ಇರ್ಬೇಕಾಗಿದೆ ಅಂತ ಇದ್ರೆ ಹೇಳಿದ್ರು. ಸೊ ಅಟ್ ಲೀಸ್ಟ್ ಒಂದು 5 days ಇದ್ರೆ ಚೆನ್ನಾಗಿರ್ತಿತ್ತು. ಅಂದ್ರೆ ಟೀಚರ್ ಆದ್ಮೇಲೆ ನಾಲೆಜ್ ಅಪ್ಡೇಟ್ ಮಾಡಬೇಕು. ಅಪ್ಡೇಟ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ಈ ಥರ FDP ಆಗಲಿ, ಜಸ್ಟ್ ಓರಿಯೆಂಟೇಷನ್ ಪ್ರೋಗ್ರಾಮ್, ರೆಫ್ರಿಜರ್ ಕೋರ್ಸಸ್ ಈ ಥರ ಅಟೆಂಡ್ ಮಾಡಿದ್ರೆ ಇದು ಆಗುತ್ತೆ. ಸೊ ಆ ದೃಷ್ಟಿಯಿಂದ ಬೇಕಾಗಿದೆ ಇದು FDP. ಅಂದ್ರೆ ಇಂಥ FDP ಒಳಗೆ ಏನ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ಜಸ್ಟ್ ಓನ್ಲಿ ಯಾರ್ಯಾರು ಎಕ್ಸ್ಪರ್ಟ್ ಇದಾರ ಆ ಫೀಲ್ಡ್ ನಲ್ಲಿ ಅಂಥವ್ರಿಗೆ ಮಾತ್ರ ಕರಿಬೇಕು. ಈ ಕಾಮರ್ಸ್ ನಲ್ಲಿ 5 ಪೇಪರ್ ಇದೆ. ಸೊ 5 ಪೇಪರ್ ಇದ್ಮ್ಯಾಗ ಜಸ್ಟ್ ಒಂದೊಂದು ಪೇಪರ್ ಒಬ್ಬರು ಎಕ್ಸ್ಪರ್ಟ್ ಇರ್ತಾರ. ಎಲ್ಲ 5 ಪೇಪರ್ ಒಳಗೆ ಎಲ್ಲರೂ ಎಕ್ಸ್ಪರ್ಟ್ ಇರಕ್ಕೆ ಸ್ವಲ್ಪ ಭಾಳ ಕಡಿಮೆ ಇಲ್ಲಿ ಇರೋದಿಲ್ಲ ಅಂತ ಇದ್ರೆ ಹೇಳಲ್ಲ. ಕೆಲವು ಜನ ಇರ್ತಾರ, ಬಟ್ ಕೆಲವು ಜನ 1 ಅಥವಾ 2 ಪೇಪರ್ ನಲ್ಲಿ ತುಂಬಾ ಎಕ್ಸ್ಪರ್ಟ್ ಇರ್ತಾರ. ಸೊ ಯಾರು ಆ ಪೇಪರ್ ನಲ್ಲಿ ಎಕ್ಸ್ಪರ್ಟ್ ಇರ್ತಾರ ಅಂತವ್ರಿಗೆ ಕರೆಸಿ ಇದು ಮಾಡಿದ್ರೆ ಜಸ್ಟ್ ಇನ್ನೂ ಅನುಕೂಲ ಆಗುತ್ತೆ ಆ ಥರ. ಸೊ ರಿಸೋರ್ಸ್ ಪರ್ಸನ್ ಇನ್ವೈಟ್ ಮಾಡೋ ಟೈಮ್ಗೆ ಆ ಥರ ಇದು ಮಾಡಬೇಕು. ಅಂದ್ರೆ ಈಗ ನಾಲೆಜ್ ಆಕ್ಚುಲಿ ತುಂಬಾ ಜಾಸ್ತಿ ಇದು ಆಗ್ತದೆ. ಈಗ ನಾವು ನಮ್ಮ ಆಕ್ಚುಲಿ ಇದರದ ಲ್ಯಾಪ್ಟಾಪ್ ಆಗಲಿ ಅಥವಾ ಮೊಬೈಲ್ ಆಗಲಿ ಅಷ್ಟು ಆಪರೇಟ್ ಮಾಡ್ಲಾಕ್ ಬರಲ್ಲ. ಬಟ್ ಈಗಿನ ಸಣ್ಣ ಮಕ್ಕಳು ಚೆನ್ನಾಗಿ ಇದು ಮಾಡ್ತಾರ ಅಂದ್ರೆ ಹೇಳೋ ತಾತ್ಪರ್ಯ ನಾವ್ ಡೇಸ್ ದಟ್ ಎಲೆಕ್ಟ್ರಾನಿಕ್ ಏನಿದೆ ತುಂಬಾ ಜಸ್ಟ್ ಇದು ಡೆವಲಪ್ ಆಗ್ತಾ ಇದೆ. ಸೊ ಅದರ ನಾಲೆಜ್ ನಮ್ಮ ಹತ್ರ ಇಲ್ಲ. ಈಗ ಜಸ್ಟ್ PhD ಮಾಡೋದು ವಿದ್ಯಾರ್ಥಿಗಳಿಗೆ, ರಿಸರ್ಚ್ ಸ್ಕಾಲರ್ಗಳಿಗೆ ಯಾವ ತರ ಇದು ಮಾಡಬೇಕು, ಸಬ್ಜೆಕ್ಟ್ ಮಟೀರಿಯಲ್ ಇದು ಮಾಡ್ಬೇಕು, ಕಲೆಕ್ಟ್ ಮಾಡಬೇಕು ಥ್ರೂ ಎಲೆಕ್ಟ್ರಾನಿಕ್ ಮೀಡಿಯಾ, ಅದು ಹೇಳ್ಬೇಕಂದ್ರೆ ಇಂಥ ಯಾರ ಹತ್ತಿರ ಅಷ್ಟು ನಾಲೆಜ್ ಇದೆ ಅಂತವ್ರಿಗೆ ಕರೆಸಿ ಇದು ಮಾಡಿದ್ರೆ ತುಂಬಾ ಚೆನ್ನಾಗುತ್ತೆ. ಅಂತರ ಜಸ್ಟ್ ಈ FDP ಈಗ ರಿಸರ್ಚ್ ಮಾಡೋರಿಗೆ ರಿಸರ್ಚ್ ಮೆಥಡ್ ಹೇಳ್ತೆ, ಯಾವ ತರ ಜಸ್ಟ್ ನಾವು ಇದು ರಿಸರ್ಚ್ ಮಾಡ್ಲಿಕ್ಕೆ ನಾವು ಇದು ಮಾಡಬಹುದು, ನಾಲೆಜ್ ಅಕ್ವೈರ್ ಮಾಡಬಹುದು, ನಮ್ ದಿಶೆಯಲ್ಲಿ ಮುಂದೆ ಹೋಗ್ಬೋದು, ನಮ್ದು ಏನ್ ಟಾರ್ಗೆಟ್ ಇದೆ ಆ ಟಾರ್ಗೆಟ್ ತನ ರೀಚ್ ಆಗ್ಬೋದು. ಸೊ ಆ ತರ ನಮಗೆ ಹೇಳುತ್ತೆ. ಸೊ ಇಂಥ ಎಕ್ಸ್ಪರ್ಟ್ ಇವ್ರಿಗೆ ಕರ್ಸ್ ಮಾಡಿದ್ರೆ ಒಳ್ಳೇದು. FDP ಯಾರಿಗೆ ಇರುತ್ತೆ ಅಂದ್ರೆ ಜಸ್ಟ್ ಇದು ಟೀಚರ್ಗಳಿಗಿದೆ, ಟೀಚರ್ಗಳಿಗೆ ಟೀಚರ್ಗೋಸ್ಕರ ಅಂದ್ರೆ ಅವ್ರದ್ದು ನಾಲೆಜ್ ಎನ್ಹಾನ್ಸ್ ಮಾಡೋಕ್ಕೋಸ್ಕರ. ಈ FDP ನಲ್ಲಿ ಏನ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ಟೀಚಿಂಗ್ ಎಥಿಕ್ಸ್ ಹೇಳ್ಬೇಕು. ಅಂದ್ರೆ ಜಸ್ಟ್ ಮಕ್ಕಳ ನಾಲೆಜ್ ನೋಡ್ಕೊಂಡು ಯಾವ ತರ ನಾವು ಟೀಚ್ ಮಾಡಬೇಕು, ಅವ್ರದ್ದು ಏನ್ ಜ್ಞಾನದ ಕೊರತೆ ಇದೆ ಅದು ಯಾವ ತರ ನಾವು ಆ ಗ್ಯಾಪ್ ಫಿಲ್ ಮಾಡಬಹುದು, ಯಾವ್ದು ನಾಲೆಜ್ ತಲುಪಿಸಬಹುದು, ಈ ಮೆಥಡ್ಸ್ ಅದು ಸ್ವಲ್ಪ ಹೇಳಿದ್ರೆ ತುಂಬಾ ಅನುಕೂಲ ಆಗುತ್ತೆ. ಸೊ ಈ ತರ ಸಬ್ಜೆಕ್ಟ್ ವೈಸ್ ಎಕ್ಸ್ಪರ್ಟ್ಸ್ ಗಳಿಗೆ ಕರೆಸಿ ಇದು ಮಾಡಿದ್ಮ್ಯಾಗ ಇನ್ನೂ ಚೆನ್ನಾಗುತ್ತೆ. ಸೊ ಈ ತರ ಹೇಳ್ತಾ ನನಗೇನು ಅವಕಾಶ ಕೊಟ್ಟಿದ್ದೀರಾ, ಅವಕಾಶ ಕೊಟ್ಟಿದ್ದಾಗಿ ತಮಗೆ ವಂದಿಸ್ತೀನಿ. ಸೊ ಥ್ಯಾಂಕ್ ಯು ವೆರಿ ಮಚ್ ಸರ್.
Thank you, sir, for your kind words and highlighting the importance of FDP. In the absence of our Honorable Vice Chancellor, Pratapa V. Halse, I request. Okay. It was not. I request Honorable Registrar of KS. Yeah. Yes, sir. Now I would request our finance officer to address the gathering.
A very good morning to one and all. I am Dr. Khader Pasha, finance officer, but basically I am not a commerce man. I am a science faculty. Earlier I was teaching in degree college, and later I passed KAS and posted here as joint controller of finance. Of course, we are professionally trained at very big National Institute of Financial Management at Delhi, Hyderabad, Chennai, and Calcutta, where the main aspect of financial management of any where we are posted is very important. So in that context, this financial statements analysis is very important to any institution or a company or any other institution doing business. Even universities are asked to prepare balance sheet now. So we are very much worried, and I hope in fact income tax people, they want us to file their income tax with a proper chartered accountant audited statements. They give these statements, but we have to understand, and also the management has to take some calls, because here at KSOU we don't have any grants from government. We are self-sufficient, and we have to make some stern decisions regarding the outflow of money, because whatever the fee we collect from the students is our main revenue flow. So here the financial statement analysis is very much essential for us. That is why I have brought majority of the commerce graduates from my finance wing to attend this FDP. It is more beneficial to even management also, because any decision is nowadays it is based on money. Academics, for academics as well as development activities, money is the in fact the main component. In that context, this is a very important program, and I hope Rajesh will do a wonderful job. He is known for it, and you are all will be benefited by his acumen and his knowledge. And I will try to stay back here for the whole day, so that I can also understand the intricacies of this financial statement analysis. Thank you. Thank you for the opportunity.
Thank you, sir, for your charismatic speech by explaining the relevance of topic and show. Now, I would request Honorable Registrar of KSOU, Professor KLN Murthy, to bestow the presidential remarks.
Good morning, one and all. Respected Chief Guest, Professor Jagdish Sir, former Dean, KSOU Mysore, and my very close friend, the already inauguration of this program, Dr. V. Rajesh Kumar, Dr. Kamble Ashok, Dean of Academic, Dr. Praveen, Register Evaluation, and Dr. Kader Pasha, Finance Officer, and this program coordinator, Srimati Usha. All the participants, students, and research scholars, teaching and non-teaching staff. Department of Commerce organized one-day faculty development program on financial statement analysis in the KSOU campus. It is one of the great opportunities see all the commerce management fraternities in our campus. The program is organized with the main intention of professional development of commerce and management faculties in accounting and financial area. You are come from various affiliated colleges and universities from various districts of Karnataka state. Our resource person, the expertise, the financial area, it is our pleasure that Dr. V. Rajesh Kumar, Professor and Dean, School of Commerce Management, Chalukya, new establishment of Chalukya University, Bangalore, is grace occasional the resource person for this faculty development program in our university. Professor Jagdish is very well-known professor in KSOU. Already I will say Dean, senior most Dean in our former Dean Academic KSOU. He has served commerce and management in various designation. After his retired also, he is extending his services for getting good grade from NAC. Today, his grace is occasional as chief guest and given keynote address. Kindly utilize the program and enhance your knowledge. I wish the commerce and management department organize these kinds of program in future, except all your cooperation in the same manner. Our Honorable Vice Chancellor is also support to encouragement to organize these kinds of faculty announcement program. I hope you will all cooperative for all successful of this program. I thank you for giving me opportunity to speak to few words. Thank you. Thank you.
Thank you, sir, for those captivating presidential remarks. Now, not the least, I would now call upon stage Dr. Sukanya R., Assistant Professor, DOSR in Commerce, KSOU Mysuru, to propose the vote of thanks.
Good morning to one and all present here. It's an immense pleasure to deliver the vote of thanks on this occasion. Firstly, I would like to extend my heartfelt thanks to our Honorable Vice Chancellor Professor Sharanappa V. Halse sir in his absence, without whose support today's program would not have come into reality. Sir is very proactive and is keen on developing academic programs at every stage. On behalf of the Department of Commerce, I profusely thank you, sir. I would also like to thank Professor KLN Murthy, Honorable Registrar KSOU. Sir has come here to grace the occasion. As an academic head, Sir has issued office orders from time to time, which has helped us in bringing this program into reality. On behalf of the Department of Commerce, I profusely thank you, sir. I would like to extend my sincere thanks to Professor Jagdish Sir, the chief guest of today's program. Professor has laid a very strong foundation to our Department of Commerce. When we contacted him regarding the FDP program, Sir has agreed to take part in the program and has given an outline about the FDP. He has set the roadmap about the FDP program and has given valuable inputs of how the FDP has to be carried out. Sir, we profusely thank you for your gracious presence and for your valuable academic inputs. I would also like to thank Dr. Rajesh Kumar Sir, the resource person for today's program. Sir has accepted our invitation and come all over here to share his expertise. Sir is very young, dynamic, and is strong in academic field. Sir has conducted a series of programs of this kind. Sir has keen interest towards academic development. Sir will be with us for the entire day and he will throw light on the micro and macro aspects of financial statement analysis by taking various cases into account. We definitely value your presence and thank you very much, sir, for being here. I also thank the statutory officers, Professor Kable Ashok Sir, Dean Academic of the University, for his academic support. I also thank Professor Praveen KB, Registrar Evaluation, for gracing this occasion. I would also like to thank Professor Kader Pasha Sir, Finance Officer of the University, for releasing funds for conducting the Faculty Development Program. I also thank Professor Ramnath Naidu Sir, Dean Study Center, in his absence. I thank the Chairperson, Department of Commerce, Srimati Usha C, for organizing this FDP. Madam is very dynamic, proactive, and has taken up the initiative in bringing this program into a reality. I thank the non-teaching staff of our department who have worked day in and day out for the success of this program. I thank all the teaching and non-teaching fraternity of various departments of KSOU. I also profusely thank all the delegates who have come here from very far off places with a strong urge and dedication to improve their capacities by attending the faculty development program. I also thank the media persons for the support. Lastly, I would also like to extend my sincere thanks to all those who have supported the program directly or indirectly to bring this program into a reality. Thank you, one and all.
Thank you, Dr. Sukanya, for delivering vote of thanks. This brings us to the end of our inaugural function and we embark on FDP's session as scheduled. So all the participants are requested to stay back as our first session for today's program. Thank you.
ಕನೆಕ್ಟ್ ಮಾಡ್ಕೊಳ್ಬೇಕಪ್ಪ ಪ್ರೊಜೆಕ್ಟ್ಗೆ. ಸರ್ ಇನ್ನೊಬ್ರು ಹೇಳ್ತೀನಿ ಸರ್ ಮಾಡಿ. ಇದು ಇದರಲ್ಲಿ ಬರಲಿ. Ramesh, very happy meeting you. Indira, oh, very fine. So nice seeing you. ಇದು ಹಾಗೇನೆ ಪವರ್ ಪಾಯಿಂಟ್ ಹೇಗಿದ್ದೀರಾ? So happy. ಹೇಗಿದ್ದೀರಾ? How is your health? Excellent. ಯೂಶುವಲ್ ಆಗಿ ಲಂಚ್ ಟೈಮಲ್ಲಿ ಬೇಕು ಮಾಡ್ತೀವಿ.
ಸೆಷನ್ ಸ್ಟಾರ್ಟ್ ಆಗುತ್ತೆ. ಬ್ರೇಕ್ ಆಗುತ್ತೆ.
ತೆಗಿಬೇಕಲ್ಲ ತೆಗೆದ ಇಲ್ಲೇ ಇಲ್ಲ ಇಲ್ಲಿ
ಆಲ್ ದ ಪಾರ್ಟಿಸಿಪೇಟ್ಸ್
ಲದ್ದಾಖಲ್ಲ ಅಂತಂದ್ರೆ ಓಕೆ, ಬಟ್ ಸೆಂಟ್ರಲ್ ಬೆಟ್ ತೆಗಿಸ್ಬಿಡಿ ಅಲ್ಲ ಟೇಬಲ್
All the participants are requested to assemble. The session will continue now. Tea break will be given by 11:30. Please be assembled in the auditorium. All the participants are requested to assemble here, please. Tea break will be given later. Please be assembled here.
ಅದನ್ನ ಹಿಂದಕ್ಕೆ ಇದು ಮಾಡೋಕ್ಕಾಗಲ್ಲ.
ಇದು ಎತ್ಕೊಳ್ಳಿ ಟೇಬಲ್.
అయితే ಬೇರೆ ಹೋಗುತ್ತಲ್ಲ ಇವ್ರಿಗೂ ಇದನ್ನ ಪೀಡಮ್ ಬಿಡಿ ಬಿಡಿ ಸರ್ ನಾವು ಇದು ಎಂದು ಮಾಡಿಲ್ಲ ಅದಿಲ್ಲಿ ಮಾಡಿಸ್ತೀನಿ ಅಲ್ಲಿ ಪವರ್ ಮಾಡೋದು ಸ್ವಲ್ಪ ಈ ಕಡೆ ಓಕೆನಾ ಇದು ವರ್ಕ್ ಆಗತ್ತಾ ಇದು ಇಲ್ಲ ಬೇಡ ಥ್ಯಾಂಕ್ಸ್ ಇದಕ್ಕೆ ಸರಿ ಇರಲಿ ಸರ್ ಈಗ ಬೇಡ All right. Can we settle down soon, please? Once again, welcome to each of you for this FDP on financial statement analysis. Apologize for the delay in commencing, but we'll certainly make up for the time that you have missed out. And before we begin, all of you come here with a specific agenda to get some validation, learn something on this theme, financial statement analysis. That can happen only if you actively participate. I'll try to make it as interactive as possible. If you can respond, it will be good. I'm sure you will have a better learning. And my humble request, each of you have an excellent expertise on this theme, financial statement analysis. For none of you, it's a new topic for sure. But my request, unlearn and relearn. Let's approach this as if we know nothing about this theme. Let's start afresh. But sure, with all your expertise, wherever you feel you can add some value, I would really love to hear that. End of the day, both you and me, if we can take away something, that will be the best thing to happen. Right. Usually I would have commenced with finding out, do you have any specific requirement apart from what we have listed? But now that we don't have time, during breaks, if you have any other specific requirement apart from what we have listed, please let us know. If possible, definitely I'll try to incorporate. On this theme, the maximum that is possible, we should be able to cover today. And whatever we can't take up, by the end of the day, I'll definitely share my details. Anything which you feel I can be of help in any of these areas, we'll discuss. And what's exciting, friends, this theme, very simple topic, financial statement analysis. But trust me, the kind of research potential it has is immense, huge. So whatever we discussed today, I'll share a lot, what all research we have done, what scope we have, where we can apply it, practically what is the relevance. I'll share all those details and experience. Those who want to pursue research, certainly this is one very good area. Right. Now, very quickly, financial statement analysis is what we should discuss. My first question to you, and to the extent possible, try to answer. Firstly, friends, what are these financial statements? Not a new term. What are financial statements, sir, madam? Okay. So one of our friends mentioned an item called balance sheet. Okay. Something called cash flow statement. Okay. Fund flow statement actually is not a part of financial statement. We'll see what it is. Statement of profit and loss, etc. But correct. So my question was, what are financial statements? I got a list of financial statements, but yes, correct. These are some statements prepared periodically. Normally, what period it is prepared for? Annually. Mandatory, it should be prepared annually as per various legislations. When the legislation is not applicable for a proprietary concern, it's tradition practice we prepare periodically once a year to know something about the business enterprise. What exactly? So that's where first we should have complete clarity of financial statements before we start learning how to analyze it, how to read it. And trust me, sitting in this hall, about any company, you can find any details. Maybe certain things will be hidden, we can't, but maximum thing about a company. I always say, this is like a horoscope. Friends, if I take horoscope to somebody who knows how to read, how they can tell our past and also future, it's possible with financial statements. Of course, can be completely accurate, cannot be, but definitely it's possible. Let's see. Now, firstly, what are financial statements? Now, I've downloaded, and all of you can do. If you go to any company website, if you go to investors or investor relations, I'll demonstrate that later, but I don't think it's new to many of us. We can download annual report of any company. So I've downloaded annual report. So one company which I'm displaying is annual report of, can we read which company it is? Hindustan Unilever. As of now, this is the latest available. And 21-22, we know is financial year, April 21 to March 22, which is the current running financial year, sir, 22-23. So after March 23, usually by July, August, we'll have financial statements of 22-23. This is the latest, and for any company you can. Now, what's an annual report? When I say financial statement analysis, Actually, what we should know is not just reading financial statements, reading annual report. But if you know how to read financial statements, most of it will get captured. Okay. Who prepares annual report? Annual report, we know what it is. But who prepares this? Who prepares, sir? Okay, company is fine, but something more specific. Okay. Now, who are the owners for a company? Sure. To be specific, which shareholders? Equity shareholders. Now, just to take a guess, any idea how many shareholders does HUL have? Hindustan Unilever Limited. How many shareholders are there for this? All details we can find in annual report. 3 crore plus shareholders. 3 crore plus. Where to see? We'll see at the right time. All those are owners, mind you. But because they're owners, can 3 crore people come and run the business? No. So what they do? The owners, the shareholders, appoint whom we call as board of directors. This board in turn appoints executive management. Who are the executive management? CEO, CFO, CA, who run the business on behalf of owners. These are, but periodically, those who are given the responsibility to run the business should report to the owners what's happening. And that is this annual report. So it's a report prepared by management of the company. Those are managing the company. To whom? To the knowledge of shareholders, the owners. And usually, this is a report sent to shareholders along with an invitation to attend the annual general meeting so that they can come prepared with this and pose their queries. Okay. Any idea what are the contents of an annual report? What is there in an annual report? Annual report, now we know. As I said, nothing new for us. What are the contents of an annual report? Friends, this is just a glimpse of HUL annual report. Like that, take any annual report, this is what you find. Friends, anything and everything one would like to know about company is available in annual report. One point of view, this is a small document. Today, it's all encompassing anything and everything by and large. We can make out, including the strategies, mind you. So if you see, in annual report of HUL, we have history, purpose, at a glance, chairman statement, CEO and managing director statement, awards and recognition, who is in the board of directors, who is the managing committee, what is their performance briefly, consumer trends. HUL is in which industry? Any idea, sir? FMCG. So in that industry, and please see how we struggle to understand the strategies. Mind you, friends, every company in their annual report spell out their strategy. You know what a strategy is. The strategies, commitments, our business model. How informative. We don't have to go for any books. Every business, every company, business model, then reports, various reports, business responsibility report, corporate governance report, EVA report, many reports, auditors report, etc. But most important, this is our focus. One component of annual report is financial statements, apart from all others. Now, please remember, I told you, I sit in interview panel of many companies. There are some common questions we ask, and 99% the respondent, the candidates don't give right answers. Now, one such simple question we ask is, what are financial statements, or what does financial statements include? And whenever we say financial statement, it includes these items: statement of profit and loss, or profit or loss, income statement, we call it as well, balance sheet, notes, statement of changes in equity, statement of changes in equity, statement of cash flows, and notes to accounts. So whenever we say financial statements, first let us remember, all these I put together are called financial statements. All these are part and parcel. Ignoring anything, it's incomplete. So whenever we say financial statements, all these are to be mentioned. So that's what you're able to see here. Apart from auditor's report, balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, notes. Now, what we need is how to read them. Simple. How to analyze this, elicit information, make decisions, whatever kind of decisions. If that knowledge we have, great. All this we do in classroom. Trust me, what we learn in classroom, what we do in boardroom, absolute no difference, apart from the way the information is provided. If you can get used to that, we are the masters. Just to mention, time permits, I'll discuss this statement of cash flows at the end. Just looking at this cash flow statement, mind you, and it's a mandatory statement. It's not fund flow statement, it's not part of financial statement. Cash flows it's mandatory. Any idea what is the statement of cash flows? What does it tell us actually? Any guess? Inflows and outflows are evident, correct, that's right. From where during this year, what are the inflows and outflows? But just think and tell. This is a report given to shareholders. As a shareholder, why do you think this is required for me? Inflows, outflows. What's the use of this for me? Mind, always keep in mind, all this is oriented towards shareholders. I'm the owner, shareholder. How does this help me? To know liquidity, etc., we don't need cash flow. Balance sheet, statement of profit and loss are enough for us. Okay. Yes, sir. Okay. Fine. Okay. All this is fine. Absolutely correct. I agree. But if you look at cash flow statement, how to look at it, we'll also see through the day. It will tell us, is this company a value adding company or a value eroding company? Is it adding value to shareholders or is it eroding their value? How? I'll mention, we'll see that as we proceed further. Each of this has a purpose. And as I said, this is our requirement. If you know how to read this, we are the masters. And as I said, sitting in this hall, I'll show you some exciting models, so brilliant. You can find out which company, what are the concern areas, what are the problem areas, where they have problems. Sitting here. I'll give you a number of examples of what we have done, our students have done to make this happen. But first requirement, friends, if you have to know how to read financial statements, first we should have clarity about financial statements. If you don't have clarity on that, how to read is a difficulty. So, what does financial statements include? We know. One is profit and loss statement. Though balance sheet is what you find there first, I'm showing a statement of profit and loss. And most of you teach this course in the class, company final accounts, the format, all that we know. So we have income, expense, etc. Some format we have. What is the purpose of statement of profit and loss? Why does a business entity prepare a statement of profit and loss or income statement? To know the result of the business performance, or in simple words, result of the business for the given period. What does result mean? Profit or loss. How to find it? Friends, in our school days, we learnt a formula for profits. In our school days, sale price minus cost price. Exact same thing, just put in a different format is statement of profit and loss. But the way it is given in annual report, which is as per Companies Act or as per Ind AS 1. What is Ind AS 1? Indian Accounting Standard 1. For some of the companies which fulfill some criteria, they have to prepare financial statements according to Ind AS 1. If not, they have to prepare the financial statements according to Companies Act. You may not find a big difference other than some arrangement in the order, but this is how it is. Unfortunately, the way it is provided is for analysis. So if you have to analyze financial statements, our first requirement is to rearrange it, reorganize it, represent it in such a manner, it gives us the information that we need. So how should we reorganize? So these are first task. I'm showing you annual statement of profit and loss of HL. You find income, expenses. That's it. Good. I know the details. I know the profits. Profits before tax, profit for the year. That. Can I read? Can I get what information I need? No. So how to present it? So this is what we need. So I'm just showing you the format in which we should first reorganize the profit and loss statement, also called income statement. And this income statement is prepared for what period? For the period ended. Usually it is 1 year mandatorily, but companies prepare it quarterly, etc., depending on the requirement. Okay, fine. Now let us recollect. How to get profits? Revenue minus expenses. Sales revenue minus expenses. So first what we take is revenue from operations. Revenue from operations. There's a first item, which is all available. It's just we are reorganizing it. So if you see, revenue from operations. Okay. What is this revenue from operations? For a business entity, based on the operations, business entities can be classified into 3 types. Trading, manufacturing, service. What are trading entities, sir? Those engaged in buying and selling. Manufacturing, which are engaged in converting raw material into finished goods and sell. And service entities which are not dealing with goods. Bata India Limited. Bata, which category? Manufacturing. DMart, trading. Essentially, it is more into trading. Of course, there is a different business model. Infosys, service. Wipro, both into manufacturing service. Wipro, we know only one unit, IT service, correct? Any idea what's the full form of Wipro? Wipro's abbreviation, mind you. Western Indian Products, started more than a century ago. You know what were their basic products? They started with vegetables and oils. After they started IT, they got recognition, but it's a age-old company, and you'll be surprised with the brands. Santoor soap, very, very famous ad. We enjoy when we see, child goes to mother who looks very young, etc. Any idea? It is by Wipro. So Wipro is both into manufacturing and service. Okay. So how should we reorganize? First item that will be considered is revenue from operations. We don't have to create anything. It's all available. Just have to pick it and put it. And this revenue from operations, as a jargon, it is popularly called top line. And when you have to read financial statements, it is essential that we get used to the jargons. Why top line? Because as a first item. I'd like to show this. Now, this is a headline recently in one of the newspapers. Cloud tail. All those who are using Amazon would know most of the supplies to Amazon is by Cloud tail. Cloud tails, top line up 25% to something. Now we know. So what does this mean actually? What is the message? The turnover or revenue from operations have increased by 25%. Increased by 25% from what? From when? Compared to last financial year, this financial year it is increased by 25%. But point is, I want you to get idea about the jargon. So top line. Now from this, deduct cost of goods sold. We know we get what is called gross profit or gross margin. And unless we have all these terminology, these items, we can't effectively read financial statements. We can, but it will be limited. But if you have, you will see how effectively we can read gross profit. But I am very keen to know, what is this cost of goods sold? Cost of goods sold. So this is one item which calls for some clarity. Let's say we're a trading entity. What does a trading entity do? Buy and sell. Okay. Now let's say during the year, let's say 21-22 financial year, we purchase goods worth 1 lakh, Sales were 1,40,000. Have you made a profit or a loss, sir? Profit of how much? 40,000. Now, the same, if you put it in this format, revenue from operation, sales is 1,40,000 less 1 lakh purchases. So in this example, cost of goods sold is nothing but purchases. Now let us say 2021-22, we purchased 1 lakh worth of goods costing 1 lakh. Sales were 1,40,000, but on the last day we had 10,000 goods costing 10,000 lying in the business unused and unsold. Now what is this unused and unsold goods lying in business called as? Inventory. And if it is on the last day, what do we call it, sir? Closing inventory, closing stock. How much? Let's say 10,000. Is there a profit or a loss? How much? Was the profit, madam? 50,000. Wonderful. How did we get this? My revenues are 1 lakh, 1,40,000. Cost of what we sold, cost of goods sold. We got 1 lakh worth of it, still 10,000 is lying with me. So what's the cost of what we sold? 90,000. So 50,000 is profit. But how did I get cost of goods sold? Purchases minus closing stock. Now, we know today's closing stock is tomorrow's. So how we, for any period, how we could have closing stock? We could even have opening stock or opening inventory as well. So opening inventory, let's say 5,000. So 2021-22 started with an inventory of 5,000. We purchased 1 lakh worth. At the end, we still have 10,000 goods costing 10,000 with us. Sales were 1,40,000. What's the result? 45,000. So which is revenue from operations 1,40,000. Cost of goods sold 95,000. How did I get this 95,000? Opening stock plus purchases minus closing stock. So if it's a trading entity, opening stock plus purchases minus closing stock is cost of goods sold. So if you look at the annual report, the statement of profit and loss, please see, first item will come to it, purchase of stock in trade, and what's the next item we can see there? Changes in inventory. Hope the screen is visible to everyone, even those at the end. Okay. Change. What is this change in inventory? In statement of profit and loss, it is always opening stock minus closing stock. So if I add the two, I get my cost of goods sold if it is a trading entity. Okay. Now let us suppose we are a manufacturing entity. So for trading entity, we know what happens. So let's say we are a manufacturing entity. Manufacturing entity engaged in converting raw material into finished goods. How to find cost of goods sold? Small things, very, very minor, nothing new, but you will see how much of difference it will create when you start analyzing. One item in this, if you don't have clarity, we are not in the right track. Okay. What does a manufacturing entity do? Procure material, convert into finished goods. So this is how we calculate opening stock of raw material, add purchase of raw material during the period. We always also say net purchase less closing stock of raw material. When we adjust all this, we get what is called cost of raw material consumed, used during the period. So how much of raw material was used during the period we get. To this, when we add conversion cost, the term itself tells the meaning. What is conversion cost? Cost of converting raw material to finished goods. We get cost of goods sold. Now, this is not a difficulty. So this was the item I was showing you. Can you please see here? Cost of material consumed. So I don't even know to make this calculation. It's available readily. But challenge is conversion cost. What is conversion cost? Or what does it include? To convert raw material to finished goods, every expenditure incurred. Firstly, the wages, the labor cost. The most prominent of conversion cost is labor cost. Two, all expenses incurred for purchase and production. All expenses incurred towards purchase and production. All this is part of conversion cost. In simple words, wages plus what we call as factory overheads, production overheads is what we consider as conversion cost. Now, in accounting, the overhead is not the term we use, but all of us are familiar in costing. When we take direct, indirect, we are familiar. So everything that can be classified as factory overheads and wages put together is conversion cost. Only problem in financial statement is where cost of material consumed. Now, can you please clear headings? Change in inventory, we know what it is. Employee benefit expense, employees. Even if I assume this as completely wages, it's fine. But can you see a number given next to the item? Number 30. This is called notes. So when I said 5 items, notes, whatever we find in the financial statements are abridged, summary. Details are available in the notes. So if I go to note number 30, I get all the details. What is all, how much, etc. So what is relevant, we can pick up. Then we have finance cost. What is it? We'll see. Depreciation and amortization, other expenses. Now, to find this cost of goods sold, we should actually do some homework. Go to note number 30, go to note number 33, find of these given expenses, what all relates to purchase and production. We should identify. And not a difficulty. Looking at items, we can easily mention, identify, but need to be done. Okay. So when I do this, I get conversion cost, I get cost of goods sold for a manufacturing entity, deduct. Now, think and tell me, please. I mentioned trading entity, manufacturing, which is the third type. For service entity, how do you find cost of goods sold? There is no goods sold. Cost of service. Usually, most often, what is the cost of service? The employee expenses. So we don't have this term cost of goods sold applicable if it's a service entity. There's a reason to ensure that there is standardized between entities, there's no confusion. This is the format given. But for analysis being difficult, we are reorganizing it. Okay, we get gross profit. Now, from this, deduct. Mind you, we have taken only cost of goods sold, just one item, but there are many other costs that are incurred. So next what we take is something called cash operating expenses. The word cash here has a different meaning. I'll tell you what. Deduct. We get an item which is of utmost importance in financial statement. So very important, I'm marking it in red just to tell you how important it is. But what is that? I'll tell you. EBITDA. What are operating expenses? Forget the word cash. What are operating expenses? Expenses incurred to run the business. Simple. What all does it cover? To put it very simply, office, administration, selling, distribution, research, development. Research and development is not common in all industries, but if we cover that as well. Now, all this is operating. So if you can recollect, factory overheads, production overheads come under cost of goods sold. All other overheads come under operating expenses. So same expenses, other expenses, I should identify among them which comes under cost of goods sold, which comes under cash operating. Believe me, it's not a difficulty. Once you look at the items, you can make out which of them come under cost of goods sold, which of them come under cash operating expenses. Now, why is this called cash operating expenses? Operating expenses, understandable. What is this cash operating expenses? Okay. So what is not paid, don't we take? Or if there's outstanding, don't we take? We should take. Okay, that's correct. Provisions also can be taken. For example, outstanding salary, if outstanding expenses, if we take as well. When I say cash, as I said, meaning is not the same as cash expenses. It's called out-of-pocket expenses. Out of pocket. For what we spend for. Have we actually paid or not is not the issue. Even if not paid, don't we take outstanding? If paid more, don't we take prepaid? Fine. So it's not about is it paid or not. It's about out of pocket. Now, are there expenses for which you don't spend? Out of pocket means for which actually spend. Money goes out of our pockets. Now, are there expenses for which there is no spending happening? Depreciation, okay, but I'll come to that. Friends, have you heard of notional expenses? What are these? I run the business in my own premises, but show rent. What is it? It's not actually incurred. There's no out of pocket. That's the meaning. But in a company, usually that notional expenses won't be there. But in proprietary concerns, we do find, etc. You may not have. So, expenses. Now, what's the full form of EBITDA? Earnings or profits before deducting 4 items: interest, tax, depreciation, and amortization. Now, I told it's very, very important. Just a few minutes later, I'll tell you why it's important. Please take any business daily. When you find anything written about any company, something about a company, for sure you will find a reference to EBITDA. For sure. Whether net profits, PAT mentioned or not, EBITDA will definitely find a mention. Why? Emphasis on EBITDA. I'll tell you in few minutes, but we know the abbreviation. But remember, I want profits. Purpose of preparing statement of profit and loss is to find profits. This profits what I got is before deducting few items. So this is not what I want. So what should I next do? Less depreciation and amortization. Depreciation and amortization. We get something. We'll see. This is a very common experience. Anywhere, recently we had some faculty interviews. This one question asked, any companies when we have candidates coming for interview, commerce graduates, postgraduates, some of them into teaching, but one question, 99% of the time we get wrong answer is, what is depreciation? So what is depreciation, sir? Decrease in value of asset is not depreciation. It is impairment. When value of an asset increase or decrease, it is called impairment. It is not depreciation. But this is a common answer we get because quite often the books also mention the same. Unfortunately, it's not true. So what is depreciation? Please follow very carefully. Depreciation is on what? Which assets? Okay, what is the meaning of fixed assets? We'll just see a little later, but all of us know fixed assets. Examples, building, plant, machinery, furniture, fixtures, vehicles, etc. Which can be converted into cash. Not necessary. Okay, I'll come to that, sir. What is the feature of fixed asset? We'll discuss in few minutes. We'll see. I mean, the way you worded may not be appropriate, but I'll come to that, sir, in just a few minutes later. We know the examples of fixed assets. Now, fixed, does it mean it will be there with us forever? No. It has something called a useful life. This projector, what is the useful life, sir? 2 years, 3 years, 5 years, depending on usage, wear and tear. So let's say every day morning till evening I'm using it, maybe 2 years, the useful life may come to an end. Once a week, once a month, I keep using it, maybe longer. Now, recently, a company had been for a training program. It's a defense company. They don't permit for us to carry our laptop. We couldn't. So we had to go there. Their laptop they gave us. And in that laptop, there is a interesting feature. In the laptop, there is an inbuilt projector. Inbuilt. Like how we have a camera, a small hole. Exactly same way. Click a button. What is on the screen will display. Do we need an external connection now? Obsolete, obsolescence, out of date. And today, what is there in that company laptop? Technology is so fast, maybe 1 year down the line, every laptop may have it. So, useful life of an asset comes to an end based on wear and tear, obsolescence, etc. And when the life of an asset comes to an end, can you shut down the business? A machinery has come to an end. Laptop, a projector, Life has come to an end. So no more programs in KSOU, can we say? No. What should we do, sir? Replace. But what if at the time the life of asset comes to an end if we don't have funds? So to ensure such situation doesn't happen, it's made mandatory, compulsory that every year a portion of profit should be kept aside. For what? For replacing existing fixed assets by the end of its useful life. Friends, profit kept aside is called what? Provision. Remember, depreciation is a provision. So depreciation is a provision, profit kept aside for replacing existing fixed assets by the end of its useful life. That is the correct meaning of depreciation, not decrease in value. A friend of mine, 5 years back, before COVID, he started a business. He purchased furniture worth 1 lakh. Recently, he sold all the entire furniture for 1 lakh. For whatever reason, he could get it. Where is decrease in value? Is it necessary asset value should always decrease? No. Depreciation is not that. Depreciation is profit kept aside for what, sir? For replacing existing fixed assets by the end of its useful life. That's the meaning of depreciation. It's a provision. So every year we set aside fund, set aside profit. It will accumulate into what we call depreciation fund. So whenever replacement has to happen, it will be taken care of. And this is, depreciation is a concept which comes from going concern concept. What is going concern concept? Which says business should always keep going. It has to keep going. When asset life comes to, it has to be replaced. So what emerges from that is this depreciation. Okay, please tell me. Land. Let's say we have a piece of land, not building, land. What's the useful life, sir? Is there any end for the useful life? No. So is there a need to replace it? Hence, for land, we don't create depreciation. Not because it appreciates. No, nothing to do with value. It's all about replacement. Since land need not be replaced, for land we don't create depreciation. Now, haven't we seen people losing money in real estate business? Which means even land value can fall. Correct? Why should I say it only appreciates? Depreciation nothing to do with value. It's all about replacement. If you have to replace, then the provision what you make is depreciation. What's amortization? For intangible assets. Can we have some examples for intangible assets? Goodwill is notional. Let's not take goodwill because it's notional. It's just value of my good name. Patents, trademark, copyrights, such assets. Sorry, sir. A human resource, yeah, it's always a question mark how to write human resource actually. Though concept is there, no balance sheet we see human resource shown as an asset. Concept is there, but do we see any balance sheet it is shown? No. And even if we show human resource, can we claim depreciation on that? No. But anyway, it's intangible asset, no doubt. But do we capture it? No. We don't recognize it in the financial statement. But others, we know what are financial statements. I mean, what are intangible assets. For that, what we create is amortization. But today, we don't use the word amortization. For everything, we use a general term depreciation, which includes even amortization as well. But we know what it means. So let's remember this. Depreciation is not decrease in value of asset. That's a wrong interpretation. In costing, those of us who teach costing, cost management, there the word depreciation is extent of asset used for producing so many units. The value of asset used for producing so many units, that is depreciation. So depreciation is captured in calculating cost per unit. How much do we take? In proportion to how much was produced. So there also meaning is not decrease in value. So nothing to do with value. It's all about replacement. Fine. Now, I'll tell you more about depreciation just a little later. Now, tell me, depreciation is mandatory. We have to keep it. Who makes it mandatory? Today we have accounting standards, but even before that, it was customary. It has to be done. Otherwise, your financial statements are not approved. But now it's mandatory, we know. How much should we keep aside? How much? Provision should be made for depreciation. No choice. We have to. How much? Now, that company can decide. It's a policy matter. Which method to use, how much life to take. No end. We can take a call. So depreciation is a policy. And unfortunately, people can play with this. Let's say I want to show more profits. What can I do? Reduce depreciation. How? Is it easily possible? Not possible, but still it can happen. Today it's not that easy. Still it can happen. Now, I want to show high profits because I want to borrow loan. What can I do? Less depreciation. I want to show loss so that I don't have to pay dividends. What can be done? Increase depreciation. Though not that simple, possible. Considering that, it can be played with. It's a policy matter. The profit what we get after depreciation is not taken seriously. What we have before depreciation. What do we have before depreciation? EBITDA. Please remember, till EBITDA, it is based on facts. After EBITDA, it is based on policy. Hence, EBITDA is of more importance than the net profits, etc. I can keep changing. I can make the policy to suit my requirement. But EBITDA based on facts. Hence, EBITDA is of more relevance than the remaining. Though everything has its role to play, but EBITDA always has better recognition than the others. Okay. So we get EBIT. What's the full form of EBIT? But more popularly, it is called operating profits. So from our operations, from our profits, from our operations, from our operating activities, was the profits we have made. From our operating activities was the profit we have generated. That is operating profit. Now, I wanted to keep one term. If this is operating profit, then cost of goods sold, cash operating expenses, depreciation, amortization, these three put together is called operating cost. So later in analysis, I'll use the term operating cost. I want you to remember operating cost includes cost of goods sold, cash operating expenses, depreciation and amortization. And when operating cost is deducted from revenue from operations, we get operating profits. Fine. Then the remaining part is simple. We take non-operating incomes in case business has any non-operating incomes. So usually we find it in, if you see the statement of profit and loss, we find it under other income, but some of this other income could even be relating to operating activities. If so, we should add it along with, otherwise it comes under this. Now, any examples of non-operating income, sir? Income from investments, dividends, interest on bank deposits, which is very common because any business entity will have a bank account. There will always be some deposit, some interest that accumulates. So anything which is not relating to operations is non-operating income. Less non-operating expenses. Non-operating expenses. And major component of non-operating expenses, finance cost. Finance cost. This item. Finance cost. What is finance cost, sir? Interest on what? Borrowings. Interest on borrowings. Finance cost. And normally we say operating expenses are expenses incurred to run the business. Finance cost are expenses incurred to fund the business. I repeat, operating expenses are expenses incurred to run the business. Finance costs are expenses incurred to fund the business. To fund, it could be by borrowing or whatever. The expense what we incur is finance cost. So when you deduct this, we get EBT, or what we call taxable profits. Taxable profits less tax or tax provision, we get profits after tax. Profits after tax, EAT, PAT, net profits, called by any name. And the purpose of preparing income statement is to find this, and this is what is popularly called bottom line. As I mentioned, these jargons are of very big relevance for us. This is called bottom line. And the entire purpose of preparing statement of profit and loss is to find this. Okay. Now tax, for the timing I'm not elaborating, but there are a lot of terminology, current tax, deferred tax, etc. At the right time, we'll make a discussion. So let's say tax or tax provision we get. And as I'm telling you, we don't have to prepare statement of profit and loss, we have to just represent it. It's there already. All these items are found in the statement, in the annual report. Just reorganize it to facilitate reading of it. Fine. Now this is the first statement, statement of profit and loss. The format in which we need it to analyze it, we have seen. And I want you to keep in mind these jargons: top line, bottom line, EBITDA, EBIT. Keep in mind, because in analysis, all these are the terms we make use of. And more importantly, please ensure we know clearly meaning of depreciation. Okay. Now, what's the next statement that we have? Balance sheet. So this is again another question that we normally ask. Balance sheet as on, as at. Okay, balance sheet. So can somebody try? What is a balance sheet, sir? It's a statement which shows the details of something called assets and liabilities. People say it's a statement which shows financial position. Now, as a layman, I don't know what is financial position. Correct, it is no doubt. But more specifically, it is a statement which shows details of something called assets and liabilities. But the next question is where, again, we hardly get right answer. What are assets? What are liabilities? Assets are what we own are assets. What we owe are liabilities. Now, this is just one of the meanings. Nothing wrong in it, correct? But this does not describe actually what are assets and liabilities. Economic, correct. Everything we include under assets. But what is the meaning of assets? Not all assets may earn income, ma'am, actually. Not all are productive assets. In fact, in analysis, that's what we try to find. How much of it is productive? We say something called quality of asset concept, which we'll see later. Now, very simple. Liabilities are sources from which a business has got the funds. How those funds have been used, applied, or what we call as assets. So liabilities are sources of funds, assets funds. Okay. So what are liabilities? Sources from where business is getting funds. Okay. Now, before we go further, this balance sheet across the world is presented in two different orders. One is called order of permanence. Order of permanence. The other is order of liquidity. Now, these are the two ways in which balance sheet is prepared, shown, presented anywhere in the world. Quickly, any idea what is this? Order of permanence or order of liquidity? What is the meaning?
Order of permanence will start with the fixed assets.
Simple, very correct. When we take long-term items to short-term items, when we present long-term items and then short-term items, it is order of permanence. It is short-term to long-term, it is order of liquidity. Now, in India, always the practice has been order of permanence. Most of the Western countries, it's always order of liquidity. Okay. Now, liabilities are sources. Keep in mind order of permanence. Tell me, for any business, what's the first source of funding? What the owners put into business? Capital. And for a company, it is share capital because it is mobilized by issue of shares. But it's not because it is the first source we show it actually at the top. When should company give back the share capital? Means this source the capital, share capital, what the business gets, company gets, will be available with it permanently till the company is closed, correct? Order of permanence. So always first we show share capital, because it is most permanent source of fund available. As a shareholder, I can sell my shares, etc. But with the company, this is available till the company is closed. Permanently available, hence it is shown at the top. Share capital. That's the first source in the order of permanence. Okay. What else? What are the other sources of funding? Reserves and surplus, which retained earnings we call it, but today it is called other equity. Same, retained earnings, reserves and surplus, but the term today we use is other equity. What are retained earnings, sir? Profits made but retained in the business. Obviously, it's a source of funding. Why am I showing here? To whom does it belong to? Shareholders. When should we give it back? No time limit. Hence, this is one more source which is available for a long term, permanently or very long term. Hence, we show it also at the top. Now, both these put together is called equity, shareholders' funds, net worth. All these are different names. Shareholders' funds or net worth. Of course, in balance sheet, you just find the word equity. Okay. So the heading what we find is equity, under which we have share capital, other equity. So term is equity, but let's remember equity means funds that belong to shareholders. So shareholders' funds are net worth. Later, when we start analyzing, these are the terms what we should be familiar with. Okay. Now, after this, what other sources? So since it's order of permanence, I should consider long-term sources. And any other source from which we get long-term funds for long-term is called non-current liabilities. All this other terminology used at present. Non-current liabilities. So what are non-current liabilities? Source of funds which are available for long-term. It's called outside source, outside funds. Because shareholders being insiders, this is called inside funds. This is outside funds. Now, quickly, how can a company, this is nothing but borrowing, long-term borrowing. How can a company borrow? From banks, from financial institutions, by issue of debentures, etc. Wonderful. But one basic question, what is long-term? When you borrow for long-term, it should come under non-current liabilities. What is long-term? 1 year is not correct. More than 1 year is not correct. It is correct only if some condition is not fulfilled. Now, just a little later, when I'm discussing assets, let us see currently, at present, for accounting purpose, what is long-term, what is short-term. This is our notion. This is what we had earlier, and that was correct earlier. Beyond 1 year, beyond one accounting period, long-term, within one accounting period, short-term was the earlier meaning, correct, but not at present. So what is it? Let's see. But when we borrow for long-term, comes under non-current liabilities, and where from any source, if we get funds for short-term, what is it? Current liabilities. And all these are source of funding only. But if it is short-term, we call it as current liabilities. Now, can you tell me what does current liabilities include? Bank overdraft, correct? A short-term loan, what you borrow from bank. But what is this creditors? We show that trade creditors, accounts payable, we show. What is it? Are they given us money? No. What are they given us? They supply goods or service for which you have to pay later. So when I say source of fund need not mean only money. Anybody who gives anything to run the business are sources. So these are people who don't give money, but they give goods or service to run the business. Even they are source of funds. Let's say we delay paying salary by 1 week, let us say. Let's say we delay payment of salary by 1 week. What do we show in the balance sheet? Outstanding salaries. For 1 week it will appear. Means for that 1 week, we're using their money to run the business. We're using employee salary to run the business. So hence it's a source. Ma'am, can you please? Okay. Now, all these are current liabilities. Now, just for simplicity, let's assume that from all sources, a company has got 100 crores. All sources, company has got 100 crores. What we do with this 100 crores is what we show on assets. So what are assets? Application of funds. So let's see, assets, application of funds. It's right, when we apply, when we use, it's what we have. So what we own, what we owe, correct. Liabilities are sources from which you got the funds, we have to give back. So what we owe, correct. But that's not the actual meaning of liabilities. For sources from which we get the funds. Okay. Now, again, assets. Friends, I got 100 crore to run a business or to start. What do I first use it for? To create infrastructure to run the business, correct? And this infrastructure, what we need to run the business, are called as non-current assets, which we used to earlier refer as fixed assets. Now, examples we know, what all is covered under this we know. But how can we describe non-current assets? What's the meaning of non-current assets? When we say assets are non-current or fixed assets, if it fulfills two features. So, sir, fixed assets, what you mentioned. Two features. What are those? One, these are assets which are meant for long-term. Meant for long-term use. Now, do we actually use or not? Maybe a different story. But all these are assets which are meant for long-term. So, purchase furniture, not for selling tomorrow. If I do so, it's not my asset, it's my goods. I purchase this to use it for long-term. But most important, the second feature, these are assets whose volume, quantity, numbers do not change frequently. I repeat, volume, quantity, numbers do not change, not value. Many times our students say, value does not change frequently. Value changes. Last week, this week, my value of my buildings are different, friends. But number, so furniture, KSOU. Once in a while, they sell what they have, they buy a new one. But on a regular basis, the number of furniture items, does it keep changing? No. Once in a while, yes, it happens. But on a regular basis, does it change? And so we're talking about numbers, volume, not about value. So what are non-current assets or fixed assets? Those which are meant for long-term use and the volume, quantity, numbers of which do not change frequently. Value changes. And can it be converted into cash? Yes. I can sell my furniture. That's not a problem. So that's not the essential feature. Okay. Now, what all does it cover? We know. Let's not get into details. And it's on these non-current assets, we actually create depreciation. Okay. Now, follow this next example very carefully. What I explain next will also give us an idea for accounting purpose, what is long-term, what is short-term. Now, let's say out of 100 crores, which are mobilized, 60 crores is invested in non-current assets. Out of 100 crores mobilized, 60 crores. Now, what's the remaining? How much is the remaining? 40. Now, if we just keep this 40 crores with us, just keep this 40 crore cash with us, can we run the business? I have buildings, assets, everything. Now, assume we're a manufacturing company. I have everything. But can I just keep the cash? No. What should we do if we're a manufacturing company? Buy raw material, convert into finished goods, sell. So, out of 100 crores, 60 crores is in infrastructure, 40 crore is with us. What do? As I said, we just don't keep cash and sit quiet. Using this, we buy cash, we buy raw material. Basic operational structure. What do we do? Buy raw material. But do you think every company will buy raw material what they need only for today's requirement? No. They may, as per policy, have raw material what they need for 15 days, 1 month, etc. Correct? So let's say 1 month. 1 month. So friends, out of 160 crores in fixed assets, remaining 40 is with us either in the form of cash or it's in the form of raw material. Fine. But again, do you just keep raw material forever? Is that the purpose? No. What do? Convert into finished goods. So we introduce this raw material into production process. Now, many times, instantly, raw material get converted into finished goods immediately. But there are cases where it takes a long duration. Now, what do we call that as? Work in progress. Now, let's say just for simplicity, in my company, in this company, it takes 15 days for raw material to get converted into finished goods. Let's suppose. Friends, out of 100, 60 crores is in fixed assets. Remaining 40 is with us either in the form of cash, or it's in the form of raw material, or it's in the form of work in progress. It is in one of these forms. Fine. Work is completed. We get finished goods. Again, all the time, as soon as you get finished goods, can it be sold away? No. In fact, in reality, companies make a policy. They always have stock of finished goods, what they need for 15-day sales, 1 month sales, because never they should be stock out. So always company maintains inventory of finished goods as a policy matter. So let's say, just example again, 1 month. So we'll have, after production, we'll have finished goods with us for 1 month, meaning the funds what we have is either in the form of cash, or it's in the form of raw material, or work in progress, or finished goods. Then we sell. If it's a cash sale, we get back our cash immediately. It's a credit sale. Friends, our money is now with our customers. What do we call them as? Debtors, accounts receivable, customers. Now let's say 2 months is a credit period we are given. So our funds are with our customers. What are assets? Application of funds. What has happened to that 100 crore is what we have to show. What has happened? 60 crore is in the form of, remaining 40 is with us either in the form of cash, or raw material, or work in progress, or finished goods, or it is with our customers. Now, after these 2 months, we get back our cash, using which again we buy raw material, etc., etc. So this 40 crores keep revolving. What do we call this as? Working capital. Working capital. But what I want you to notice here. Now, in this example I've given you, if you spend cash today for our operation, buying raw material, etc., when do we get it back? If you spend today, it will take raw material form, it will take work in progress form, etc. When can I get back my money? 1 month it will be in the form of, another half month in the form of work in progress, and the 1 month in the form of finished goods, 2 months in the form of, and then we get back. So after 4.5 months, we get back the funds, what you spent today. This 4.5 months is what we call as operating cycle. 4.5 months. Friends, presently, to distinguish, to identify is something long-term or short-term, this is the criteria as per Ind AS. If the duration of anything is beyond operating cycle, it is long-term. Within operating cycle, it is short-term for accounting purpose. So in this example, 4.5 months. Now, let's say we borrow a 6-month loan. 6-month loan. Earlier, what we used to consider it as short-term. But 6 months in this example is beyond what? Operating cycle of 4.5 months. How it should be recognized as long-term. But is it easy for every business to find operating cycle? No. Hence, in the Ind AS, it is made very clear. In case it's possible to calculate, then that should be the criteria for long-term, short-term. If not possible, then go with the earlier practice, 1 year, 1 accounting period. So anything beyond 1 year would then be long-term. Within 1 accounting period will be short-term. But that is only if a business is not able to identify the operating cycle. Fine. Now, all these assets, cash, raw material, work in progress, what do we call it, sir? Current assets. Current assets, which include, now we know, cash in hand or bank, stock of raw material, work in progress, finished goods, accounts receivable, all these are current assets. But again, what are current assets? What is it include? I know. What are current assets? Those assets which has exactly opposite features of non-current assets. How many features are mentioned for non-current assets? What were the two? Meant for long-term use. Volume does not change frequently. These are assets which are meant for short-term use. I don't buy raw material to keep it forever. I don't keep finished goods forever. I don't give credit period forever. So it is meant for short term, and quantity, volume, numbers keep changing frequently. There's a bakery on the way. Please go watch. 12:30, 1 o'clock. Please go and take a look. Will everything there be same? The items, the cash? No. 30 minutes time in a bakery, when all these items, the stocks, what they have, the provisions they have, the cash can keep changing. Imagine a business entity like HUL, Bata. Second by second, all this keeps changing. Somewhere in the world, something is happening every minute, every second. Friends, that is the reason a balance sheet is always prepared as at the closing hours on 31st March. Let's say closing hours are 5:30. Balance sheet as at 5:30 p.m. on 31st March. This is the balance sheet. 5:31, friends, it is different. Not for every business, but all big businesses, definitely 5:31, it is not the same. That's why statement of profit and loss is always for the year ended. Balance sheet is always not even as on, it is as at. Closing hours, that's implied. Closing hours of 31st March. Fine. Now, these are current assets. So we know the features of it. And simple logic. The funds we mobilize and the funds we utilize has to be one and the same, correct? Means both has to tally with each other, balance with each other. Hence, the statement is generally regarded as balance sheet. How can there be difference? What we mobilize, what we utilize. Even if we don't utilize, it's with us in the form of cash. It takes. Now, one of our last 2 points about financial statements. Please follow carefully. Friends, in this example, I'll just give some numbers. Let's say EBITDA is 100, depreciation 20, let's say. So EBIT is 80. Let's say non-operating income we don't have. Non-operating expenses, let's say 10. So we have EBT 70. Let's say tax is 30%, some number. So these are profits after tax. 49 profits after tax. But, well, this is fine. As per books, this is what you get. We call this as accounting profits. Don't forget, this 20 depreciation is not an expense, correct? What is it? Profits kept aside. So was the profits on hand? Was the profits made? 49. But how much do we have on hand? The adding back depreciation, correct? Now that we call as cash inflow or cash flow. And in analysis, this has a big role to play. This accounting profit, but the profits on hand is different, and that is what we call cash flow. And as again, very high significance in business decisions. If you remember, accounting is completely based on profits. Financial management, all those of you teach, everything is based on cash flow, because that is the reality. There's a very beautiful quotation about income statement. Very beautiful quotation. It says, in income statement, top line is vanity. Vanity means a show. It is shown, but we can't decide anything based on that. So in income statement, top line is vanity, bottom line is sanity, some sense, cash flow is the reality. Beautiful sentence, but which captures the essence of what we need in income statement. Now, this is a basic discussion on financial statements as a background to understand how to read financial statements. And I repeat again, we don't have to be masters in preparing financial statements. If I don't know it, is okay. Today, accounting packages, tally, etc. we teach our students. Click of a button, these are produced, these are generated. Our expertise should be not in preparing it, but reading it and making decisions. How? For that, you need background of financial statements, and what is prepared and shown as such may not be useful for analysis. Hence, we need to reorganize particularly the income statement. But if you see liabilities, equity, non-current liabilities, current liabilities, and if you see asset side, non-current assets, current assets. Friends, earlier, those of us who remember teaching this, have been teaching this subject from many years back, remember the old format of balance sheet, old format. Fixed assets, investments, current assets, current asset loans and advances, losses, etc. Okay, losses, let's not worry. But earlier we had investments specifically captured, recognized separately. Now we don't find it. Just have two headings, non-current, current. Where has it gone? What are investments? Funds invested outside the business, mind you. What is invested outside the business are called investment. What we invest inside will be either in the form of non-current asset or current asset. What invest outside. Friends, if we invest, which is common in any company, if it is long term, it comes under non-current assets. Can you see? Long term. So a heading called financial assets, under which we show. The short term also, it comes under current assets. So it's not a separate heading anymore. It is covered under either non-current assets or current assets, depending on the investment made. Is it for long term or short term? What is long term? Beyond operating cycle period. Within that, short term. But in case we can't find operating cycle for any entity, then it is 1 year. That's always holds good. Fine. Now, what does financial statements include? 5 items. Statement of profit and loss, balance sheet. Statement of cash flows I mentioned later. Notes to accounts I told you already. It gives details of every item. It's not anything different. It's just what provides details. But what is the statement of changes in equity? This also is a part of financial statement. What is equity? What does equity include? Shareholders' funds. What does it include? Capital and other equity. What is other equity? Retained earnings, reserves and surplus. So statement of changes in equity shows just that share capital, please see. Beginning of the year, how much? Any issue made during the year, any redemption, repayments made during the year. What is the change in equity, in capital, and what's the change in other equity? Now, other equity, as you rightly said, reserves and surplus. A business could have, can you see, many reserves and surplus items. Reserves and surplus. So, different items. How much was the balance at the beginning? How much is transferred? How much is utilized? Same details. But shown separately for clarity, because as a shareholder, this is my fund. Equity. I'm the shareholder. Annual report is meant for me. I'm the shareholder. I need to know with more clarity. In the balance sheet, we just have the items. So changes we can know here. That's the only purpose, to provide more clarity for what has happened to the shareholders' funds. But whatever we find in the balance sheet, that is good enough for analysis. These details may not be of any great significance for us. Fine. Friends, with this background of financial statements, we are now ready to understand how to analyze financial statements, how to read. And all this while, when I say tools and techniques of financial statement analysis, what are the standard answers we get? Comparative statements, common size statement, ratio analysis, trend analysis. All those holds good. Nothing is a waste. But only those does not lead us into any direction. Ratios is a must. One must know. No choice. All the models what we discussed today are ratios only. But we cannot just stop at calculating ratios. How to integrate these ratios and make decision? That's what all the models tell us. For instance, today I listed 5 models. Hopefully we'll get time for everything. One of them takes really good time, but very interesting, very exciting, trust me. DuPont model. Not new. I'm sure many of you already know. You made your students do projects on that. Then we have Petrosky F score. What is it meant for? I'll tell you at the right time. Altman Z score, Banish M score, and modified C score. I'll tell you when I take up each of you, what's the purpose. And I just listed 5, there are hundreds. And Beauty is you can create your own model. Huge potential for research in this. But recently, examiner one of the universities, a student has attempted to come up with a model, Z-score, what I will be discussing, in Indian context. What it was given for US context. For Indian context was a model. Attempt has been made, not highly successful, but good scope for research. Each of these, what I take up. So let's see how to read. Now, please take a couple of minutes, reflect on what we have done, anything to discuss on statements, let us, and then start with analysis. Post lunch session or last session, we'll be discussing some cases also. We don't have time for many cases, but I'll show you what's the case so you can be ready for it. We'll be giving you this case actually later. Friends, this is a case, simple case. We have 5 balance sheets given. 5 balance sheets, A, B, C, D, E. There are 5 businesses given. Electric utility, trading company, something. Now, case is about finding out which balance sheet belongs to which company. Simple. Now, if you're able to do, it means I have a good hold on how to read financial statements. Now, when I do this exercise, every different platforms, my finding is students have cracked it earlier than faculty. That's my experience. Of course, maybe they think more creatively, innovatively. We probably restrict ourselves to something. For them, no boundaries. They're right. Of course, right, wrong is not the point. And most of the time, students from other than commerce background are able to give more right than commerce students. Again, probably because we're restricted in our thinking. But when some of them address this case, quickly, I give one more case. Similar, 12 balance sheets, 12 companies. And these are just tip of the iceberg. And this is what gives us practical exposure. Taking some problems in classroom working, yes, it's a beginning. It has to happen. But if this can't make out, whatever learning probably is not getting in the right direction. So let's see how many of these we can take. At least one of them will definitely take up. Other I'll share and I'll give you my contact details. Those who need more such cases, please mail me. Send you good number of cases on every aspect relating to accounting. Okay. Now, madam, what time should we give the break? Ma'am? Okay, 1:15. Okay. Right. Now, we'll make some progress with one model. I can't complete it entirely before lunch, but let us make a beginning. Let's see how far we can reach and go further. So, the model I'm first starting with is called DuPont model. DuPont. Trust me, so exciting model it is. Everything that you have learned in commerce education can get actually embedded into this. Now, before I start, I'll give you 2 instances. What actually happened in 2 cases. And so, I was once working with one MBA in college, a B school. You know, MBA students have to do a dissertation, a research project that to work with a company. 2 of our students got opportunity to work with a company in Bhadravati called Mysore Paper Mills. This company is located in Bhadravati, but the head office is in Bangalore. So 2 students, Mubina and Manjunath, if I'm right. They got the opportunity to work there. So they went and reported on first day. It's a government company. They were given permission, but even company didn't know what work to give them. Should they be used as employees or should they be given information what they ask for? So every day they used to go, sit there, have proper lunch, excellent lunch, come back. 1 week, this was their progress. But one day it so happened, the managing director was not there for 1 week when they reported, was in Bhadravati, came back. He saw these two, asked them, what are you doing, why are you here, etc. They said, we are here for internship, project, etc. Even he was not aware what to do, but at least he came up with some idea. He said, our company, Mysore Paper Mills, from past few years, our results are very erratic. 1 year we are making big profit, next year immediately it's a big loss. What's happening, we don't know. And being a government entity, the system was not appropriate there. So he said, I'll give you annual reports of last 10 years. You find out what is happening. What's the problem? Is there a problem or what's happening? Now, these students collected the reports, came back to the college. All these are models which are taught in MBA curriculum. So we had a discussion. They created templates on Excel, which we can create. I'll also show what can be done. So they created templates on Excel sheet, fed a standard data, got the outcome as per DuPont model. Not even 3-4 days they took. Very simple. You can finish it in very short period. They sat and analyzed and they identified problem areas. They went to the company and presented in front of managing director. He thought, when I give 10-year annual report, they'll take 2-3 months. Friends, 1 week they were back and most of the problems were true. And some of them he actually probed and find out, yes, it is true. And he was very thrilled. He offered them jobs. They didn't take up, but that was what could happen because of this model. Friends, I run a company called Vittam Pravina Gurushala, Finance Expert Academy, through which we do a lot of training programs. One program we do is called Finance for Non-Finance Executives. One company in Bangalore called Triveni Engineering, please later Google search, it's one of the top 25 engineering companies in the world, top 5 in India. This company was founded by an engineer, but after his death, his wife continued with it. She was also an engineer. And the people of that company were very well known across world for their knowledge, particularly in their domain. So one day they called us, they said, in our business we're doing very good. In our domain engineering, we're the world best. But when it comes to small finance matters, we're clueless, we don't know how to make decisions. None of them have the background. So I said, yes, we'll do this program, Finance for Non-Finance People. So we went there, we collected their annual reports, 3 years annual report they could give us. We just observed certain things in the company, came back, applied this model on Excel sheet. There's a training program. I started the first session saying, in your company, these are the problems you have. The managing director, she got very angry. Who are the insiders giving you all this information? Told her as to give your financial statement revealed by itself. And then, and this program was only for the top management, 12 directors of the company, only for directors. Then and there they started probing. By evening, they had solution for many of their problems. But what could make it happen was this model, DuPont model. Trust me, very powerful. Okay. Now let's say I give you annual report of some company. So here actually took annual Bata, Dr. Reddy's Laboratories, Infosys, Maruti, Reliance Industries, Shobha Developers, Tata Motors. You can download any. Let's say I give you annual report of any company. And you are aware by now, in annual report, financial statements particularly, you will always find it for 2 years, last year and current year, correct? Always for last year and current year, all the financial statements. Now, ask a simple question. Suppose, find out in this company, compared to last year, in the current year, is there a growth? Is there a stagnation? Is there a decline? So simple exercise. With an annual report, identify, is there a growth, stagnation or decline? That's the exercise, let us suppose. How will you find? What will you do? Okay, in this case, somebody said decline, but please remember always, this is the latest current year, this is last year. Always so. Okay, but now, how will you find out, friends? What will you see? Source, that's enough. But what will you see in financial statements to identify, is there a growth, stagnation, decline? Turnover, okay. So in this example, revenue from operations, 96, 51, 193, looks like there is a growth. But why should I take turnover, friends? Why not some other item? Bottom line. Now, suppose, just example, top line shows there is a growth. Let's say bottom line shows there is a decline. Just example. In this, it is not the case, but let us say. Different items can go in different direction, correct? Now, what can be our inference? Based on top line, should we say growth? Based on bottom line, should we say decline? What should I say? So, looking at these items may not be appropriate. If I take any one item, not adequate. But more than one item, there's a problem of no conclusion because each item may go in different direction. How to find out? Friends, even cash flow again still is one item. DuPont Corporation, a US-based company, group of companies established in 1800s. In 1914, more than a century back, one of the employees called Donald Brownson came up with this model to find in our company what's happening. Is there a growth, decline, stagnation? What is the reason for it? And what are the problems? He came up with this model, and such a powerful model today across world, whether they use the name DuPont or not, but what we discuss here is the standard form of analysis. Now, according to this model, it says to find, is there a growth, stagnation, or decline? You don't have to look at different statement. It says just take one item called equity. What's the abbreviation for this? ROE. Now, all of us know ratios. Can you please tell me how to calculate ROE? PAT divided by shareholders' funds. PAT divided by shareholders' funds. Where do we find PAT? Income statement. Where do you find shareholders' funds? Balance sheet. Under that equity. That equity is shareholders' funds. Take the percentage. Just example, let us say last year this ROE was 24%. This year, let's say it is 21%. Now the model says this is enough for us to find, is there a growth or decline? What does the number say? Decline. Last year, current year. Now you may wonder how ROE one number can tell us about this. By the end of this model, you get to know this ROE is more than enough for us to know the direction in which a company is going. So in this example, I took last year 24%, this year 21%. So it shows there is a decline. Now, always a first doubt, how can one number tell us there is a growth or decline? We'll see that by the end of the model. Obviously now I'm interested to know why. And if there be growth also, we should know what led to the growth. Any fall, we must know the reasons. How to find? So in this case, there's supposed to be a decline. How to find? Friends, this model says ROE, return on equity, is a product of profitability, efficiency, and risk. According to this model, ROE is a product of, mathematically, what does product mean, sir? So according to this model, ROE is profitability into efficiency into risk. Now what it means is, any change in ROE, let it be growth, decline, whatever it be, is either because of change in profitability, or because of change in efficiency, or because of change in risk. One of this or a combination of this would have led to that. So our job is to find which has led to growth or which of this has led to decline. How to know? So for that, first we should measure profitability. How to measure profitability? Very simple. Bottom line divided by top line. The jargons. What is bottom line, sir? PAT. Top line, revenues or turnover, is called profitability. Also called net profit margin. So this model says, DuPont model, to know the direction of business, just calculate one item called ROE, enough. But to know the reason for growth or decline, we should decompose ROE. Decomposing means splitting it. So one reason why change in ROE is because of profitability. How to measure it? Now again, let us say, friends, last year, let's say it was 29%. This year it is, let's say, 25%. So again, some numbers. So last year, net profit was 29% of sales. This year it is 25% on sales. Again, what does it say? Decline. So which means the decline in his ROE is because of decline in profitability. But again, I'm interested to know, and I must know, what led to decline in profitability? Numbers are good. Numbers are fine, but it's not numbers that I need, reasons. Now, please see next how interesting. So what does this model say? It says, decompose profitability further. How to find the reasons? So please see some formula which I write. So it says, take PAT by PBT. What is PAT? PBT, profits before tax. PBT by PBIT. What is PBIT, sir? Profits before interest and tax. PBIT by revenues. So to further find why there is a decline in profitability, we should further decompose into this. PAT by PBT, PBT by PBIT, PBIT by revenues. Now, can I multiply these three and see what happens? Now multiply, it's into, I said. If you multiply, what happens? PBT, PBIT gets cancelled. What remains, sir? PAT by revenues, correct? So all that we are doing is decomposing profitability into three factors. Okay. Now, see the first factor, quite interesting. Now, PAT by PBT means what, sir? The profit after tax is what percent of profits before tax. Now, let us say last year this was 70%. Some number, 75%, let's say. What is the meaning? Last year, the profits after tax was 70% of profits before tax, which in simple words means tax was 25%. So take PAT by PBT, I read the complement. If PAT was 75% of tax, PBT, it means tax was how much? 25%. So last year that was the effective tax rate. Now let's say this year, same PAT by PBT 70%. What does it mean? Tax rate is 30%. What has happened? Increase in tax, which has led to decrease in profitability, decrease in ROE. So one factor which may have impact on profitability is the tax factor. But then the question arises, why did tax increase? One, because there could be change in law. There could be some amendment, etc., which might have had a negative impact on business. Outside factor, we can't help it. But quite often, it is because of mismanagement. Again, tax I don't think is new for us. One day delay beyond due date of filing the return, all of us know the consequences. For individuals, it might be small, but for business, it's huge. One document which you don't submit properly will have big consequences. Now, all this is called tax management. So the change in tax could be because of external factors, which is not in our control, or because of our own problems. Now, only when we probe, we get that idea. For that, I should know, I should find a tax. This decomposition tells us what all I should look at. So one aspect I should look at is the tax. Now, even if it's a decrease, good, but find out why. 2020-21, Reliance Industries Limited, tax rate was 3.1% effective tax rate. Would you believe it? Reliance Industries, I'm talking about. There's a big debate why it happened. Because Business Line came up with a beautiful article. And I wrote one case on that. It's a published case now. Reliance Industries Limited. Is there a likelihood of manipulation? Was there any manipulation due to which there was decrease in tax? We're discussing this case also at the end. I'll give the data for this, where we can find, but 3.1%. So when the decline, we should probe the reasons. But if there's a decline, it may be possible it's because we're using the tax provision effectively. Have you heard of Dr. Reddy's Laboratories? Which industry they are into? Pharmaceuticals, correct? They're based out of Hyderabad. They had plants, the factories in Hyderabad and Chennai. But friends, in 2005, they set up another plant in Baddi, Himachal Pradesh. Now, what was the need for Reddy's Laboratories to go that far, Himachal Pradesh, and set up a plant? And they're based out of South India. Exactly. At that time, there was a 80IC. It was introduced in Income Tax Act, which said if you have a entity, production entity in Himachal Pradesh or the 7 northeastern states, 100% of profits are exempt for 15 years. 15 years, imagine the tax it could have saved just by using tax provision. Could have set up anywhere, but they went with the tax provision and took advantage of it. So if we use effectively the tax provisions, we can save, else we could lose. So one reason why there will be change in profitability is tax factor. So what does the model say, sir? To find what's happening in business, just calculate one measure. What is the measure? ROE. But to know the reason for change in ROE, we should decompose. Was the first element of decomposition? Profitability. But any change in profitability, increase or decline, could be for what reason? So one reason is tax. That is it external factor or internal? If I identify internal, then we should address it. That's where knowledge of taxation matters. And income tax today is so complicated. Though long back there is a proposal how all indirect taxes would be replaced with GST, which has happened. Income tax, there is a proposal to have what is called direct tax code. Even direct tax bill came out, a lot of public reading happened, but somehow it got stuck. Otherwise, we would have had a new direct tax which could have addressed many issues. Even today, what we follow is Income Tax Act of 1961. What scenario it was made, today the scenario is completely different, 360-degree different. Yet we follow the same, so many complications. Hence, quite many times companies suffer because they can't understand the compliance of it. But if that is the reason, maybe this could have led to it. So that is one reason. Okay. Now, in the next formula, what do you think is the factor? Interest factor, exactly. Interest factor. Interest on what, sir? Borrowings also. But I'm not elaborating now. I'll come to this factor a little later when I discuss something called risk. I'll come to that. But interest on borrowing, as it increases, profitability could decrease, ROE could decrease. In case there is a fall in this, opposite effect. But I'll elaborate this later. But most important is this. If at all there is a decline in profitability, one of the major culprit is the third item. Tax and interest effect may be very small, but the major culprit would be this. What is PBIT? Profits before interest and tax. Operating profits, mind you, on revenue. So let's say last year this was 22%. Last year, what does it mean? The company generated 22% of the revenue was profits. Let's say this year it is 21%. Small decline, small. Still, it's very serious. Decline may be very small percentage. For us, 1% does not matter at all. But for a business, it's a serious affair. When a small fall in this, it should be taken seriously because most often businesses go bankrupt, businesses fail because of this item. Okay. Now, when I say operating profit is 22%, it means operating cost is 78%. Now, can you recollect? What does operating cost include? cost of goods sold, operating expenses, depreciation. Depreciation is a policy, let us keep aside, but mainly because of what? Cost of goods sold. And so any fall or change in this should find the reasons. What was the reason for this? How? Please see, I'm showing it here. We take operating cost by revenues, which is just complement of this. If this is 22%, then last year what was operating cost? 78%. 21% means this year was the operating cost? 79%. So because operating cost increased, profitability decreased, due to which ROE decreased. But now comes the question, why did operating cost increase? In fact, this analysis is the core part of DuPont. Why did operating cost increase? So to find out what we do, we take cost of goods sold by revenues, operating expenses by revenues. And by revenues because to have a same base. Now, what do you mean by cost of goods sold by revenues? We're taking what percentage revenue is cost of goods sold. Similarly, operating expenses. So again, let us suppose last year this was cost of goods sold was, let's say, 65%. This year it is, let's say, 68%. What has happened, sir? What has happened? Increase. Because the cost of goods sold has increased, what has happened? Operating cost has increased. Operating profit has decreased. Profitability has decreased. ROE has decreased. Why did cost of goods sold increase? Now think continue. What does cost of goods sold include? Material, wages, and all other factory overheads. Now, this was the reason we had to discuss that background. So what we do for this, we find material cost as a percentage on revenues, labor cost as a percentage of revenues, and factory expenses or factory overheads as a percentage of revenues. Okay. So it could be one of these reasons. Now, again, let's say when I calculate this, material cost as a percent of revenue, let's say last year it was 8%. This year it's 9%. 9%. What has happened? Increase in material cost, due to which there is increase in, due to that there is increase in, due to that there is fall in operating profit, fall in profitability, fall in ROE. So one reason that has contributed is material cost. But again, why did material cost increase? You should know, all of us have learned something called material variance. Can you just remember what are those variances? Material cost variance, usage variance, price variance. So the change in material price cost could be either because of change in price, change in usage, wastage, anything. How to find? Simple. Apply the variance analysis, whatever you learned. Let's see how many aspects which we learn getting integrated into one place. You get to know the reasons. Exactly same way. Let's say labor cost has increased or decreased. How to find? Labor variances. Similarly, overhead variances. Now, operating expenses, what does it include, sir? Office and administration expenses. So, office and administration expenses by revenues. Similarly, selling and distribution expenses by revenues. Compare. And not all the time everything should have increased. Let's say last year office and administration expenses were 2%. This year it is, let's say, 1.5% on revenue. Good. It's a fall. But find the reason. How could it fall? What happened? Was it cost cutting, cost planning? What actually happened? Identify. If it is a favorable factor, implement it. Take it further for others as well, but not identify. So how to find the reasons for this? So office overhead variances, selling and distribution overhead variances, etc. In fact, usually all these overhead variances, as you remember, are broadly classified into variable overhead variances and fixed overhead variances. So apply that, you have an idea where. Now, I'm not elaborating into variances as of now. I'm just giving the idea. We can go deeper into every item and identify what has been the reason for change in ROE. Now, all this is relating to profitability, first factor. Now, I'll just summarize what I discussed till now. I know if I continue for some more time, I have to wake up each one of you, say lunch is ready, have lunch. I don't want to take that risk. So after discussing financial statements, we started discussion on one model called DuPont model. A very powerful model which can help us to identify the problem areas in the business. What should we do for this? Just listen, sir. Few minutes, I'll summarize. This model says, just one measure is enough for us to know the direction in which a business is going. And what is that measure? ROE. So calculate it for last year, this year. How to calculate, we know. Find the direction, growing, declining, whatever. But whatever is happening, we should find the reason. So this model says ROE is a product of profitability, efficiency, risk. So any change in ROE, one of the reasons could be profitability. How to measure profitability, how to decompose it, and how to further probe is what I've been explaining. Now, if we do this, specifically, particularly even one or two items, if you can identify, which is the problem area, business has some input for corrective action. So the Triveni engineering, what I was mentioning, that major problem with material and inventory, which I'll mention later, that was a major area of problem, and some expenses. Of course, from annual reports, what we could get is limited. But when we raised this, when they started probing, they could identify that there's a lot of underhand dealing, some misappropriation that was happening, which they could prevent. But at least they could get a hint. This area, there is some concern. Fine. Now, post-lunch, we'll quickly take this further. Efficiency, what is it? How to measure it? How to decompose? Risk, what does it mean? And by the end of this model, you'll get to know how ROE, one number, is enough for us to know what's happening in business. Once we complete this, we'll take up a few other models. Then after another break, we'll take up the cases to address. Let's see. So please take a break, have your lunch. Let's meet.